India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, beginning a new week, and this is an important one. Not that other weeks are not, but this is especially important because it also marks the culmination of this long-running elections over 50 days now, and that comes to a close. And then on Saturday, which is towards the end of the week, we get the exit poll results, and the next week, early next week, is the election results. Markets are doing just fine. They're near or at all-time highs. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. So, big week. The last trading week before the all-important election results. A once-in-a-5-year event, right? The market is going to react to. But the good part is that we've been clocking highs, record highs. And later tonight, the US markets will be shut, so no cues from there.
Well, that's right. And I don't know whether NFL watched the IPL finals yesterday. It was a bit of a damn squib because,
really damn squib, yeah.
The team that was chasing finished it up in 10 overs. Yeah. So we had plenty of time post that. But now all eyes on the World Cup as well. So that's about sporting action. But we'll focus on the markets for now.
And, markets are in fine form, right? And we are going into the election results at record highs, pretty much at record highs on most indices. So sort of let's, begin by telling you some of the cues which are most important. So point number one, markets, especially the Nifty, of course, made a new all-time high, 23,000. It's in uncharted territory in that sense. Bank Nifty lagging behind a little bit, but near all-time highs as well. That 50K mark after Nifty's 23, 50K on the Nifty Bank is what people are eyeing. Big week ahead, as we said, with election exit polls on Saturday, and then, of course, results on Tuesday, which is the first exit polls, fourth is the election results, which means that, it's always going to be interesting, into it, out of it, and, of course, once the market will react on Monday to the election exit polls, and then, the final numbers, the tally, etc., which comes on the 4th. FII intensity, selling intensity, maybe, it's too early, but just last couple of days, it's reduced a little bit. They sold on Friday again, but Thursday, of course, there was a big buy number, and Friday's selling number was large enough, but, relatively speaking, as compared to the last few days, not that big. Massive short covering in index futures continues. And this we highlighted on Thursday, and it's continued into Friday as well. So as of Friday's close, FIIs are now net short only about some 16,000, less than 16,000 contracts. This number as of Thursday was 98,000 contracts, from 98 to 16. So that's a massive covering. And by the way, so Wednesday was near 2 lakh contracts. 2 lakh became 98, and 98 has now gone down to 16. We was making this point on Thursday and on Friday as well, that when you bounce from very extreme levels, and this was one extreme, a little over 2 lakh odd contracts short, typically it goes into neutral, and then sometimes it goes into the other side, on the other end of the spectrum, which is net long, and it sometimes goes into an extreme phase as well. We're not there yet. We're kind of evened out with this covering we saw on Friday. Okay, U.S. equities on Friday ended higher. S&P was up about 3/4. Nasdaq was up about 1% as well. So decent cues out of there. The 2-year is, by the way, the U.S. 2-year yield is at about 4.95. So the only reason I'm highlighting that is because it's inched back closer to about 5%, whereas the long end of the yield curve is still hovering around 4.5 odd percent. So it's kind of flattening. The yield curve is flattening. You've got dollar index, which fell back under 105. So it hit 105, but now comfortably under that particular level. That's good. Oil prices still hovering around 81 to 83. So we're at about 82 odd dollars a barrel. The 100-day moving average is 83.7. So, I mean, technically, if you're looking at, a level close by, that's perhaps the most relevant one. Sonia said, I mean, U.S. markets are shut, so there's not very much to take away when we come back tomorrow from a global perspective. So where does this leave us in terms of levels on the Nifty? Resistance is on the trend line, which is basically joining the previous highs, and that meets the Nifty at about 23,125. And then you got to look at the monthly Bollinger Bands, etc. once this level is taken out. So 23,125, first number. Support comes in at 22,586. I mean, the market's run away a little bit, so there's a bit of a gap here, but 22,600 roughly is where the first supports start to come in. Bank Nifty is lagging behind, but it did now finally on Friday close comfortably above the 61.8% retracement. That level is 48,832. Immediate resistance is 49,334, which is the 78.6. And then, I mean, you basically have got all-time highs just under that 50,000 level. This on the way down, supports come in. The hourly average closest is 48,332, which could be used as a bit of a trailing reversal stop for the Nifty Bank. GIFT Nifty will come up on your screen. I think the rest of the Asia, etc., is doing quite okay as well. We're up about 17, 18 odd points, a little tentative to begin the day and the week as well. Sonia.
Absolutely. And I think, this market is going into the elections very strong, right? I mean, at all-time highs. So I guess in that context, the expectations are a bit on the higher side. That's the only problem. But other than that, this is a big week for the market, as we've been saying. Last full trading week before we get into the election results. How do you approach the markets? The Nifty and the mid-cap index are both trading near all-time highs as we speak. But the big focus area for me is the Bank Nifty. Now, let's not forget that the Bank Nifty is now just 2% away from its all-time high. So, my eye is going to be on which way the Bank Nifty heads. In all likelihood, there will be a lot of participation from heavyweight banks. So HDFC Bank is the one in focus. The stock is now above its 200 DMA. It saw large delivery-based buying in the last 2 days. There was 3,000 crores of delivery buying in HDFC Bank. And, the big question is, will the Bank Nifty hit new highs this week itself? And will it assume, take on the leadership mantle for the next leg of the rally in the market? The US markets are shut today for Memorial Day weekend, so there could be a lot of volatility in that context for our own markets because we don't have any cues from the mother market. But the Nasdaq closed at record highs and Nvidia closed above $1,000 for the first time. So in that context, we've had very, very strong cues from the US markets. Now, apart from the Bank Nifty, the other space I'm watching is pharmaceuticals because two stocks, large caps that have come out with good set of numbers. One of them is Divi's Labs, where the margins have been very, margins came in above 30% after 5 consecutive quarters. So I'm looking at Divi's Labs this morning. And the other one is Aurobindo Pharma, where the results beat estimates. The revenues went up 17%, margins were higher than estimated. More on that later, but I'm looking at banks and the pharmaceutical stocks today. But other than that, it seems like it's a really strong market. Yeah. Of course, just 1 week left before
that's
the
right.
D-Day.
Yeah, absolutely. So we'll have the crucial election verdict, and also you have the expiry that will play out. So the May expiry will play out, and it's been quite a good one, though at the start of it, it was quite volatile. So that's going to be another focal point. Now, the Nifty, well, it's expected to consolidate in this range of around 500 to 600 points odd. That's still the expiry day. And then, in fact, post that, we react to what the exit polls have to say. The Nifty Bank, that's going to be the crucial one in there. The Nifty could consolidate a little bit, but if the Nifty Bank wants to head towards that 50,000 odd mark, which is an all-time high, then in fact we could see a bit of a move. Remember, it has to move around 2.5%, which could drive the Nifty much higher from here on, but we'll have to see how that goes. Now, we've been making this point, right? When the FIs are net short by close to around 1 lakh contracts odd, you see a bit of a bounce. And just take a look at that. This is data over the last 1 year or so. 1 lakh contracts, when they're net short, you get a bounce of around 2.5% or thereabouts, so even more, 1.5 to 2.5% odd. And this time it played out no different, because effectively 2.6 lakh contracts, going by the new lot size, well, it's around 1.3 lakh contracts. So even post that, we were up close to around 2.5%. So that 1 lakh net short contract, well, that's actually the trigger to see the markets move up. And just take a look at the short covering. Just in the last week, from around 2.5 lakh contracts, we're down to around 16,000 contracts odd. Now we're on the verge of going net long. So bulk of that short covering bounce has already played out. What are the options data suggest? Since we have expiry, that's going to be important to track as well. The 23,000 call, fair bit of open interest, 20 lakh shares were added, 22,900 put as well. The premium out there has come down from close to 200 rupees. It's at around 107 rupees. And there is writing being seen at both those two strikes. Which brings us to the level. If you're looking at a broad band, 22,700 on the downside should be crucial, because when we were moving up, that was a bit of a resistance. So that's important. And going by the options data, around 23,200, that should be the resistance on the upside. So that's a crucial 500-point band. What you don't want to break is this 20 DMA, which is at around 22,450 odd. The Nifty Bank, I told you, that holds the key. Well, the fresh all-time highs are close to around 50,000 odd, and the 20 DMA becomes a reference point on the downside. The stock that I'm tracking is RCF. It's come back to life. In the last few sessions, we've seen a good move on that particular stock. And, in the on Friday's trading session, the delivery was more than 60 lakh shares. We haven't seen this in very, very long. To give you an average for the last 10 days, it's around 7.5 lakh odd. And what it did with this sort of a move, it took out the 20-day MA, which is at around 147, 148 odd. So RCF could be the stock that you could be tracking. Going by the delivery volumes, go by the momentum that the stock has shown. It saw a sharp correction from the recent peak, but now it's coming back to life. So I'll keep an eye out on that one, guys.
Okay, thanks a lot, Nigel, for that. So RCF in focus, and of course a whole host of other stocks as well. But let's see, big week for the market up ahead. Lots of trading to do before that election verdict that happens on the 4th of June, which is a Tuesday, so next Tuesday. And before that, you have the exit polls as well on Saturday. But on the equities front, we have a comment coming in first up from Chetan Seth of Nomura, who says that the markets remain highly sensitive to US data, dancing with it like drunken sailors. They remain modestly positive on Asia, ex-Japan stocks, and emphasize focusing on stock selection, but see balance of risks tilted to the upside.
Okay, we also have some opinion from Rupal Agarwal from Bernstein, and this is an equity call. She still sees opportunities within India and reiterates the preference to chase momentum stocks and more quality exposure. Recommends taking profit in high volume, low quality, small and mid-cap names, especially the ones which are overvalued and crowded. Bernstein is closer to an inflection point on high volume trades than they were at the start of the year. That's Rupal's view.
Let's also get you some money market views this morning on the rupee. Kunal Sodhani of Shinhan Bank says the diminished Fed rate cut bets are the outcome of a hawkish Fed commentary and upbeat US economic outlook. He expects only one Fed rate cut for this year. The dollar index finds support at 104.1 while strong resistance at 105.5. The MSCI flows, lower crude oil prices, record high dividend payouts by the RBI are all assisting the rupee. For the dollar, INR 82.95 acts as a support while 83.25 acts as a resistance.
On bonds, we've got Ajay Magnolia of JM Financial, who says that the 10-year yield closed below 7% last week following a huge rally in the Indian market. Liquidity continues to be in a deficit, which may prompt a possibility of bond buyback again by the central bank, although market response for buybacks has been tepid. Reversal of selling by FPIs may also pull yields lower. He expects the 10-year yield to be around the 6.97 to 7.03% levels today.
Well, we have a lot of stock-specific action track for you. We get to that in just a bit in our special top 10 segment. We look at NTPC, Divi's Laboratories, United Spirits, Aurobindo Pharma, Bosch, Torrent Pharma, Cochin Shipyard, Sundaram Finance and Hindustan Copper. All of them will be reacting to positive news flow. While Glenmark's past quarter numbers were a little bit tepid, though the guidance was pretty okay, that stock is expected to open up in the red.
All right. Well, Ed Yardeni is president at Yardeni Research. Ed, good morning. Good to have you with us here. Thank you very much for your time. I mean, last week, Ed, the big talking point, of course, was the NVIDIA numbers and the upgrades it's seen and the continued momentum. It's like the big leader for everything AI related, right? So, and we've been talking about this US market concentration for a while. What's your sense? I mean, does it give you, because it's been such a big important driver for the market overall in the US, does it give you confidence that the market there perhaps continues to do well because it lifts so many other boats along with it?
Well, it has, but as you point out, even among the Magnificent Seven, NVIDIA stands out. Not all of them are doing anywhere near as well as NVIDIA. The other thing that we have to recognize is the reason NVIDIA is doing so well is because other technology companies are spending a huge amount of money on its GPU chips. And so there's a lot of capital spending that's going to be weighing on the technology profitability of some of the other companies. So I think, this idea that everybody's going to benefit from AI, we have to recognize that there's going to have to be a lot of money spent just to develop it.
Okay. Ed, hi, good morning. All eyes will be on the Indian markets as we head into the election counting day on the 4th of June, which is next week. And, this run-up has been pretty solid. I mean, our markets have been at record highs in tandem, of course, with global markets. But your thoughts on how one should approach it, given that we have a big event upon us?
Well, I think the market's discounted a lot of very, very good news. And I think the market's expecting a fairly smooth political transition after the election, that nothing much will change. Sometimes the market likes certainty rather than uncertainty, and that might help to keep the market going to the upside. But again, it has discounted a lot of very good news. And then I think it's going to start to get some competition among global investors as global investors look for something somewhat cheaper than India. And China stands out. There are certainly some signs that the Chinese government is doing everything they can to revive their economy. Their industrial profits just came out, and they are showing some signs of recovery.
Hi, Ed. Good morning and good to see you. That's an important point you're making, because if I look at MSCI China, well, it's outperformed MSCI India, and it's outperformed by a good deal. It tells you that maybe, in fact, valuations are becoming a bit of a pain point for India. But I wanted to ask you about the flows. The FI flows coming into India, particularly in the last 45 days or so, it's slowed down dramatically. They have turned sellers. And yes, that could be because outflows coming out of the emerging markets. But India has come in for a particular harder hit, in the sense the flows are a little higher. Do you think post the election verdict, they return back to India?
Well, I think again, I don't think there's going to be any big surprise to investors with regards to the election. So I don't know that the election is a real issue for foreign direct investment. I think these things kind of come and go. I think the basic trend is clearly for more money to go into India by global investors seeking opportunities in an economy that's growing rapidly, an economy with a relatively young workforce, and an economy that is fundamentally capitalistic in its nature. So I think India is still going to remain very attractive for foreign direct investors.
Okay, nice. On that optimistic note, India is going to remain very attractive for foreign investors. We'll thank you, Ed, for joining in and appreciate your time here on CNBC-TV18. Let's slip into a quick break. On the other side of the break, we have our entire research team joining us with the list of top 10 stocks for the day. Stay tuned. Welcome to Bazaar Morning Call. Plenty of stocks to talk about this morning, so let's get straight to it. First up, NTPC is on our radar. Vivek is here to give us the latest on that. Vivek, good morning.
Well, good morning. NTPC, number one, the results largely in line operational. But what the street will take positive cues from is the fact that the company has given very strong commentary as far as Capex is concerned, as well as thermal capacity addition, as well as ordering is concerned. Now, first, let's take a look at the results itself. Revenues high by almost 7.6% on a year-on-year basis, coming in a little over 47,622 crore mark. EBITDA higher by 19% on a year-on-year basis, and margins coming in closer to the 30% mark this time around. Profitability higher by almost 26.5% this year. Now, talking about the conference call, the company has given quite a lot of positive commentary, especially in terms of the thermal capacity ordering. So the company is now targeting new thermal orders of close to 15.2 gigawatt, in FY25, FY27. The expedited timelines also have been given by the company for award of pipeline of 10.4 gigawatt to be awarded in FY25. Earlier, the market was working with a figure of just around 4.1 gigawatt. So that's a large jump up. More importantly, something that the street has been waiting for quite eagerly is the listing of the renewable business. That has also been expedited, and the company expects this particular renewable energy arm to be listed in October, November of this year itself. And lastly, thermal power guidance for commissioning is another 2.8 gigawatt in FY25 and another 1.5 gigawatt in FY26. So strong commentary coming in, number one, from NTPC, and also positive read-through for other capital good companies as well.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Ekta. Ekta, how were Divi's Laboratories numbers?
Well, actually, it was a good set of numbers. It was a strong recovery that Divi's Labs reported. Revenue was up around 18%, margins 31.7%. It recovered to over 30% margins after 5 quarters. Margins were 33.5% last in Q2 of FY23. Now, the profit also came in at around 538 odd crores, and Q1Q as well, there was a margin improvement. Now, the commentary from the company was that the margins were maintained despite a price fall in APIs due to the backward integration which is undertaken by the company, plus higher volume share. With respect to long-term supply agreement with one of the innovative customers that they have, they said that there's going to be a capex of around 650 to 700 odd crores. And I was just reading an additional point with regards to the GLP-1, where they said that they're only going to be looking at the KSM, key starting material or basic amino acids when it comes to GLP-1. So maybe that's not going to change the projection too much. So that would be a key monitorable for Divi's going forward. Cash on books stays strong at around 3,200 crores at the end of FY24. Though the numbers were strong, there are some analysts who are a little skeptical because of the quarterly fluctuations that you see in a business such as Divi's. That's probably the only sore point this time.
Right, Ekta, thanks very much for that. Well, let's move on to United Spirits, which came out with earnings as well. Mangalam is here with details. Mangalam, morning.
Well, good morning. So those results were largely in line with a lot of green tinges, though. So if you look at the revenue for United Spirits in the fourth quarter, just under 2,800 crores, a little better than street expectations of 2,650 crores. The EBITDA was a tad shy at 334 crores. The street was working with a number of around 350 crores itself. But the net profit at 241 crores was largely in line with expectations of 247 crores. Now, in the net profit itself, there were a couple of factors. One, on the way down was, the exceptional loss that came in at 31 crores due to supply chain restructuring. But it was buoyed higher by about 111 crores of other income. This compares with 18 crores same quarter last year. The key positive this time around was the prestige and above volumes came in at 3.7%. The street was working with a number of about 2 to 3%. Even the popular business, the volume growth came in at 4%. The street was working with a flattish sort of number, anywhere 0 to 1% sort of move coming in out there. And the gross margins, which most on the street were expecting flatness quarter on quarter, has seen an increase both year on year and quarter on quarter, telling you things are improving. The management con call is at 3:30 today. And out there, the important thing to watch out for would be demand in the first quarter, given the election-related disruption. For now, expect the stock to open in the green.
Okay, thanks a lot for that. Aurobindo Pharma also was a good set of numbers. Results beat street estimates. Ekta is back to tell us more about that. Ekta, over to you.
Well, yes, revenue was up 17%, margins 22.1 versus 15%. Street was anticipating 21% in terms of margins, and the profit 900 crores plus. This is despite a one-time exceptional of 122 odd crores. US revenue was $432 million. The street was working with a range which was quite wide. It came in at the lower end of the range, and it was lower Q on Q. So that was probably the only sore point. Specialty and injectables business was at $104 million, which is 24% of sales. Growth markets were up 49%. So there were a lot of other segments which really aided Aurobindo this time, despite the US coming in at the lower end of the range. Now, this news which could be the dampener is that the company's Unit 3 of Eugia Pharma Specialities is classified as an official action indicated status, but the street was largely anticipating this, considering that the 9 observations were pretty much factored in and they had stopped manufacturing temporarily, etc. And hence, the possible worst case scenario was already factored in for Aurobindo. Call is at 8:30 a.m.
Okay, we'll await more details from the call. But Bosch is the other one that we're looking at this morning. Good set of numbers on the operational front, actually. So I'm going with green over there. The top line growth is still in low single digits. So that is a bit of a dampener. I mean, it's been a 4.2% top line growth. But the margins have improved quite a bit. So it's the second consecutive quarter of 13% plus margins for Bosch. And that's something that the street will definitely like. The margins coming in at 13.2% versus 12.9% year on year. And the net profits have gone up about 41% at 564 crores. The company has also recommended a final dividend of 170 rupees a share. We're awaiting more details on from the presentation, which hasn't been uploaded yet, on what the growth has been in the mobility business, which has been a big driving force for them. So more details awaited on that. But for now, I'm going with green on Bosch.
Okay, all right. Well, but Ekta has had a very, very busy weekend. She's also tracking Torrent Pharma and Glenmark Pharma. Ekta, tell us about those two numbers.
Well, yes, Glenmark, again, the call is at 8:30 a.m., so it could swing either way based on the commentary from the management. But just based on what they reported and, what they've reported in terms of the bottom line, I could expect the stock to probably be in the red. Revenue is up around 2%. The street was anticipating a decline of 4%, so that's come in better than expectations. Margin 16.5%. Street was anticipating 15.7%. Loss has widened on a year-on-year basis. India did well. It was up around 13% year-on-year. US sales $91 million. Street was anticipating around $101 to $105 million. So a bit of a disappointment there. Call at 8:30 a.m. Torrent Pharma, good numbers. Revenue up 10%, margins 32%, in line with estimates. Profit 450 crores, again in line with estimates. India was up 10%, US was down 6%, Germany did well, was up around 11%, Brazil was up 17%. The company is also going to take shareholder approval at its AGM for raising up to 5,000 crores. But remember that they do this on a yearly basis. It is an enabling resolution, but nonetheless something to take note of.
All right, Ekta, thanks very much for that. Well, let's move on. Cochin Shipyard is the next one which reported earnings, and Upasana's got this one. Upasana, morning.
The company's reported a strong set of numbers in Q4 FY24. The revenue stood at 1,286 crores versus 600 crores on a Y-on-Y basis. EBITDA stood at 288 crores versus EBITDA loss of 68 crores on Y-on-Y basis. It is important to note that there was an exceptional item worth 64 crores in Q4 FY23. The margins for the quarter stood at 22.8% and PAT stood at 259 crores versus 40 crores on a Y-on-Y basis. So all in all, we are seeing a strong set of numbers coming in from Cochin Shipyard. Hence, I expect the stock to open in green today.
All right, thanks a lot for that, Upasana. Well, I'm looking at Hindustan Copper, and the street loves this one. It's been a big, seen a big outperformance. From the recent high, it's corrected close to around 8 to 9% odd. But these numbers actually look good. Top line more or less flattish, but the EBITDA number was up close to around 21%, and that's what took the margins to around 40%. That compares with around 33%. So that looked good. How did that happen? Employee costs were sharply lower. The consumption of power and fuel as well sharply lower by 20% apiece. So that was good news. And the profit number, well, that came in lower by close to around 6%, but that's because other income was much lower. Otherwise, operationally, these numbers look very, very good. Just to mention, the EPS for the last year was only around 3 rupees, so the stock trades at around 120 times. But the street is not looking about what happened in the past. They expect copper prices to move up, demand to also hold strong, and that's why, in fact, it trades at around the 370 rupees. So expect the stock to open up well in the green.
Okay, expect the stock to open up in the green. Sundaram Finance is the other one we're looking at this morning. Abhishek is here to give us a lowdown. Abhishek, how did it look?
Well, AUM growth was pretty robust over there, growing at 27.3% YOY and more than 4% sequentially. So the YOY growth rate is perhaps one of the best that you are seeing in last 6 to 7 years. P&L momentum, other income has aided earnings. NII, that is net interest margin, has been under pressure. NII growth of 20% YOY and 3.2% quarter on quarter is below the AUM growth rate that you are seeing. So my calculation shows that net interest margin might have declined around 30 basis points on a YOY basis and 5 basis points sequentially. Other income growth was robust at 78.7% YOY and 110% sequentially. Provisions also spiked up sharply, growing at 542% quarter on quarter and about 721% YOY. And in terms of asset quality is improved, so it might be that they might have taken a write-off in this quarter. PAT has grown by 60% YOY and about 68.7% quarter on quarter. As per IRAC norms, gross NPA ratio is at 1.98% versus 2.61% in the previous quarter, and the restructured book in absolute quantum has declined more than 24% quarter on quarter. So AM growth being healthy and asset quality improving, stock might be in green today. Back to you.
Okay, thanks a lot for that. So plenty of stocks really to remember today. But in case you missed any of them, here's a quick recap. Stocks with positive news flow, there's NTPC, Divi Labs, United Spirits, Aurobindo Pharma, Bosch, Torrent Pharma, Cochin Shipyard, Sundaram Finance and Hindustan Copper, while Glenmark is the only stock on our radar that's likely to open in the red. But there's plenty that's happening in the world of commodities as well, so let's get some quick action going there. Manisha Gupta, our commodities editor, is joining in. Manisha, hi, good morning.
Morning, Sonia. Well, the previous week was all about profit taking, but this week it started slightly on some opportunity buying on the lower side as well. Remember, it's a long weekend for US and the markets might see exaggerated moves on the back of lower volumes. But the crude oil prices, after declining 3% in the previous week and hitting a low at almost 80.65 for Brent, are back above $82. The markets are now looking at the OPEC and allies meeting, which is on 2nd of June, which would review production policy. And there are expectations that OPEC will continue to hold off some production to support the prices. As of now, it is 2.2 million barrels per day, which the voluntary cuts are at. Same is the case with the metals as well. Last week wasn't so great because we saw the gold prices fall by 3%, copper was down 2.5%. But right now in the Asian markets, we're looking at 1 to 2.5% of gains come back for many of these commodities. Well, a slight decline in US dollar also seems to be supporting, and markets really are in a mode where you are looking at buying on every dip.
All right, Manisha, thanks very much for that. So that's basically the commodity action, which we will revisit a little later as well. Well, let's take a break here. Prakash Diwan will be with us with what he makes of some of the fundamental cues, earnings which our team outlined. So we'll ask him how some of these stocks will react and what's to trade. We're back with that in just a bit.
Welcome back to Bazaar Morning Call. Well, we have Prakash Diwan joining in now to give us, some updates on individual stocks and what he's making of the market so far. Prakash, hi, good morning. I wanted your thoughts first on HDFC Bank because, there is large delivery buying that we're seeing in that stock. In fact, in the last 2 days, we've seen almost 3,000 crores of delivery buying in HDFC Bank. Do you think that the Bank Nifty could lead the market higher now? And on HDFC Bank particularly, would you advise fresh money to be put to work?
Good morning, Sonia. So, logically, the Bank Nifty has to catch up with the Nifty, there's no doubt. And it's been kind of last few days building itself for that kind of an up move. And within that, if you see, a couple of days back in the trading session, HDFC Bank actually stood out and contributed to the Nifty and the Bank Nifty's move as well. What it tells you is, this is purely on the basis of the volume and the price volume data I'm talking about, because there hasn't been a big change in the fundamentals except for the last quarterly numbers that were shared. All the selling that was imperative given its underperformance, relative underperformance to other banks and all, probably is being done with. So what it means is that you won't have selling pressure. And if there's some sort of an up move within the banks, HDFC Bank will definitely participate in that initially, and then subsequently, because of its weightage, lead the charge as well. So I'm quite positive if somebody were to tactically put money into banks, HDFC Bank definitely makes the cut now, given where it is in terms of the price and the levels, the volume levels that we are seeing getting traded for sure.
Prakash, hi, morning. Aurobindo Pharma, Ekta was just outlining those numbers. I don't know if you looked at it closely, but any thoughts if you did? There are a few other pharma companies also which reported.
Good morning, Prashant. So, yes, I personally feel Aurobindo usually flatters to deceive. You've had these multiple times, things start looking very positive. There is a semblance of recovery. There is a semblance of salience, actually, in some of the verticals. But what my concern has been that there are still a lot of unknowns that I haven't been able to anticipate and which hit you quite hard at times. Whereas if you look at something like a smaller company like Orchard, I know we don't normally talk about this given the fact that it's smaller. You have far better, traction in terms of the business, the underlying business trajectory going up. So I would rather allocate money to that. Some of the MNC pharma companies are looking very promising, and of course, if you analyze the overall numbers of pharma, they're far better than what other sectors have seen. From a percentage performance perspective. So if let's say you have 100 companies within pharma, 80 of them have done far better than the market averages. So that tells you that pharma as a sector will definitely give you a lot of returns. But I would be a bit picky and not necessarily go forward with that at this point in time.
Okay. I also wanted your thoughts on Ashok Leyland, post its numbers. And of course, we have some management changes as well. So we're going to talk about that. But, just listening to the conversation, we have the management joining us. Ashok Leyland is the first company we're looking at this morning. Revenues were in line with estimates, but the margins came in at a beat. They were up 310 basis points year on year. And Ashok Leyland now has a new CFO, Mr. K.M. Balaji, who's the current deputy CFO of the company, will assume the role of CFO. And the current CFO, Mr. Gopal Mahadevan, who has been at the helm for very long, will now be elevated to a new role. So to talk more about this, we have Shenu Agarwal, the Managing Director and Chief Executive Officer, and Gopal Mahadevan, the whole-time Director and Chief Financial Officer at Ashok Leyland. Mr. Mahadevan, first, good morning to you, and Mr. Agarwal, good morning to you as well. Mr. Mahadevan, I'd like to ask you about this change of role. You will now no longer be the CFO of Ashok Leyland. You have gotten elevated to a new role. Can you elaborate what is the nature of this role and what's the rationale behind this change?
Thank you for that question. I just wanted to share 2-3 points with you. There is a change of role. I continue to be on the board as Executive Director. My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. So, which is why I'm transitioning into that role, and that's why we have a new CFO in place.
Well, Mr. Mahadevan, let's come across to you. Since your role will be more strategic, finance and M&A, what is the focus, say, over the next 2 to 3 years in M&A in particular? What areas would you be looking at?
I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
All right. Gentlemen, good morning. Mr. Agarwal, the fourth quarter, let's get to some of these numbers now. So fourth quarter saw a degrowth in top line. Revenues were down about 3% or so. Do you see, this kind of continuing into FY25? What kind of sort of growth are you expecting for this financial year?
Yeah, thank you for that question. Let me just put FY24 in the right perspective, because a lot of people think that it has been a tough year. I think it is mostly because of the recency effect of the last quarter of FY24. But if you look at FY24 and you divide it into 2 parts, the first part being the first 8 or 9 months of the year, you will see that the MHCV industry was really growing at a very healthy pace. I think the growth rate was roughly around 8 to 9% in the first 7 or 8 months. Yeah, but if you look at the last 4 months or so, you will see that some degrowth had happened, right? And therefore, the sum combination of that was that for the whole year, the number looked very small. The number was still 4% growth in MHCV, but it was smaller. Yeah, but if you look at this situation in the right perspective, then we will understand that the reason the market degrew from, let us say, November, December until March was because of a very high base effect, which was a one-time effect of this OBD2 regulation that had come in last year, in the previous year. Yeah, because of that, there was a lot of pre-buying that had happened in FY23, and that is why FY24, last 3 or 4 months, did not do very well because of the high base effect. Now, but if you exclude that 3-4 month period, you will see that April, October, the industry was growing very well. And even in April this year, now in FY25, the industry has grown by 10%. So, based on that, we do believe that FY24 actually was an excellent year. And we also think that that momentum will now carry forward to FY25 also. Before the year started, a lot of research agencies had forecasted that H1 might be a very bad time or a time of degrowth. Some people were even saying H1 might degrow by about 15% in MHCV space. But now April, which has grown by 10% in MHCV industry, has proven all that wrong. A lot of people had a lot of anxiety about the elections also, that elections might have a negative effect. And so far, we have not seen that. April was good. Even in May, we are seeing very positive momentum on the ground, right? So we are maintaining a lot of optimism about FY25, not just for the whole year, but even for H1.
Okay, so you're saying that the CV growth momentum will carry forward into FY25 and you're maintaining optimism. Mr. Agarwal, what does this translate into in terms of growth? Are we looking at a 10% growth? Can you get back to high teens growth in FY25? And MHCVs particularly, you spoke about how in the last 4 months of FY24, there was some degrowth. But what is the growth rate that we're looking at now in FY25?
So, see, for MHCV, I mean, it's too early in the year to give you a number for the whole year. But what we will like to say is we are optimistic. We think that the industry, against the earlier original projection of many people in the industry, that industry might degrow by 4, 5, 6, 7%. We think that is not going to be the case. We think even in worse situations, industry might be flattish, but we are very optimistic or hopeful that industry should actually display some kind of a growth in FY25.
All right, let's focus on the margins then, Mr. Madhavan. The operational performance has been strong. Margins went up by around 300 basis points or to around 14%. The question is there scope for further improvement from here on?
I'll break it into two parts. There are external factors and internal factors. And I think Sheenu talked about the external factor where April has been a 10% growth. May seems to be, on very firm ground, terra firma. So it looks like, there is going to be a reset of the earlier expectation that the market can degrow. So possibly there is growth there. Second one is on the external factor. We must remember that India is the highest performing economy in the country, in the world today. And it is investment-led growth that is posting this GDP of 7.5% that is happening. So that's going to be extremely positive to the MHCV. The third bit of it is this huge demand that is happening on buses. If you look at it, we are, by the way, India's #1 bus manufacturer today. We have reinstated that position, reclaimed that position, and done it very smartly with a market share of nearly 39% last year in FY24. Now, with all of this, the other bit that is happening is price realizations in the industry are getting better. All players in the market are double-digit EBITDA margin, which is very, very good for the industry. And I think they've gotten used to the fact that, we need to push up margins in an industry where there is demand. On the internal side, which is more core to Ashok Leyland, what we are doing is, despite any, despite, I would say, any favorable conditions that are happening on, steel and other raw material prices, we would want to create our own capability to ensure that we are at a much higher level of EBITDA. So there has been the teams, manufacturing, product development, quality, a whole host of cross-functional teams have been working to take out cost of the product, even as we are supplying superior products to customers. That journey will continue. This has been happening over the last few years, but has gained tremendous pace in FY23 and FY24, and that would also continue. So to answer your question, we had mentioned early part of last year, and this is not a forward-looking statement, this is more a direction that we have set ourselves for. We would want Ashok Leyland to be in the mid-teens EBITDA margin, and we are pursuing that journey very, very relentlessly.
All right, the goal remains mid-teens margins, and you're pursuing that relentlessly. Mr. Agarwal, if the goal is that, will it how much more can you squeeze out of, as you said, optimizing costs more? Do you think the bulk of that advantage is already behind?
Oh, cost, cost optimization never goes off the radar and should never go off, all the time you're launching new products, all the time you are bringing new technology. And all the time, I think there is always a scope to optimize products. So I think, but on the cost optimization, we are specifically very happy with the way the teams have delivered this, especially in the last 2 years. We still think that there is a lot of opportunity left. I think at least for FY25, we are taking a very ambitious target on cost optimization as well. So I don't think it is a journey that stops. It is something that will continue.
Okay, finally, Mr. Mahadevan, what is the plan with Leyland's EV adoption pipeline? I'm asking because, globally there's a bit of slowdown, at least in the passenger vehicle end of things with EV adoption. Are we seeing the same in commercial vehicles as well?
I think, let me put it this way, I think EV is set to grow because people are getting used to it. People want clean energy. ESG is becoming a very important piece of business and everyday life. I think people are becoming extremely conscious at the individual level and at the corporate level. So at the community level and at the government level, the impetus is even higher. So we are possibly one of the few countries in the world where there are multiple layers of promoting alternative clean energy. So there are schemes for that, for two-wheelers, three-wheelers, four-wheelers, trucks and buses. So I think, and there is a stated policy of the government that they would want to promote usage of EVs, especially in cities. This is one part. The second one is the government itself is pushing for scrappage of old vehicles, which is again going to be kind of auguring well for the industry. But at the same time, let me tell you that the core diesel business is not going away anywhere any fast, right? It's going to be there for, quite a few years, if not decades. And I think there is a transition that will happen between diesel and alternate energy. And Ashok Leyland is priming itself. It is ensuring that it is riding both the horses very, very efficiently and leadingly.
Okay, Mr. Mahadevan, all the best and thank you so much for joining us and speaking to CNBC-TV18. Mr. Agarwal, thank you as well. So that is Ashok Leyland talking about how they believe that FY24 was an excellent year for the commercial vehicle sector and that growth momentum will be carried into FY25. But let's talk about the markets now because it's a big week for the market as we have, it's the last trading week before you have the counting day on the 4th of June, which is Tuesday. You have the exit polls on Saturday. Anuj is joining in. He's joining us from Delhi actually this morning to talk more about the markets. Anuj, last and final week before the D-Day and, largely this market has been trending upwards. You think that trend is something that can continue?
Morning, Sonia. And you know what, if you want to experience what heat wave is even at 11:30 at night, you should come to Delhi. It's extremely hot here, maybe some election heat. But I tell you what, it's almost a repeat of 2019 in terms of the market. It corrected in the first four phase and then had a big rally. And before the exit poll last time had hit new all-time high. I think we've already done that here. Last one phase is left and that's on Saturday, of course. So now you straight away react to the exit poll on Monday. You've got a clean week this week. And this week will be about pre-positioning ahead of numbers. And you've already started to see that with the kind of stocks which are running. The market's verdict is clear. The fear factor is out of the way and the market is pricing in a third term for Prime Minister Modi. Now, a matter of conjecture, in terms of how many number of seats. This week could be about chasing momentum, and I think Bank Nifty is the best example of that. We spoke about it on Friday as well. The other big thing to talk about is what's happening in the index futures from FIIs. For last 2 days now, we have seen big buying. 7,200 crores on 23rd May and 5,400 crores on 24th May. So Thursday and Friday, 2 big days of buying. If you look at index futures short positioning, or positioning rather, from 2.46 lakh short contracts, we are down to 15,000 short contracts. And I won't be surprised if today we get into the net long side as well. Coming to the levels then on the Nifty, the first level to watch 23,112 to 23,163 based on the options. This is the monthly expiry. And then 23456 is the big resistance. In terms of support, we have 22,800 to 22,850 based on options. And bigger support is 22,400 to 22,500, which is based on the charts. On the Bank Nifty, the first resistance would be 49,350 to 49,400. I won't be surprised if we test that today. That's the option zone. And then 49,900 to 50,000, the all-time high. And support is at 48,600 to 48,700, Friday's low, and 48,350 to 48,500 based on the options. Today's quote of the day comes from Steve Jobs. If you're working on something that you really care about, you don't have to be pushed. The vision will pull you.
All right. Nice one. Anuj, take care. Hydrate plenty and come back safe. Well, thanks very much. We'll take a quick commercial break here. We'll be back with technical experts. Srikanth and Sudarshan will be here with some specific strategies in terms of how to trade the market. And of course, stocks as well. Stay tuned. That's coming up.
Welcome back. Well, let's get in our technical experts. Sudarshan Sukhani joins us. Hi, Sudarshan. Good morning. Good to see you in. Tell us, what's the trade on the Nifty? We have pulled back a goodish bit from the lows. Now we're at all-time highs. Where do we go from here?
Yeah, good morning. See, we've done a lot of sort of strength starting from 21,800 to 23,000, a 5% gain in the Nifty in just a few days' time. I'm putting this in perspective because I think that the big gains have already come in the market. Obviously, we are all talking about the very short term. So if this week should probably be a part of a consolidation process rather than, more gains in anticipation of exit polls or the final results. I doubt it. So the trade is, be very careful now. Instead of focusing on the Nifty or the Bank Nifty, it's wiser to focus on individual stocks, which may be giving you chances even without the election news. But for the Nifty, you should be a buyer only on significant 100, 150 point dips. If the dips don't come, don't buy.
Okay, Shrikant Chauhan is also joining into the conversation. Shrikant, hi, good morning. This is a market that has been uptrending for a while, and now it looks like there could be some more to go, especially once the election verdict is out of the way. Is that the right way to look at it, and what are your thoughts on how to approach it on individual stocks?
Good morning, Sonia. Good morning, Nigel. Yeah, I think the overall trend of the market is like showing a lot of strength. Almost 1.5 month market spent below the levels of 22,800, and crossing this level is certainly suggesting us that we are heading towards the levels of 23,500 or 23,800 in next few days. Ideal strategy should be to look for adding some position if there is any minor correction close to 22,900 or 22,800 levels. We are not expecting any major correction, but yes, because of the 5% sort of rally in just last 9 days, we could see some correction. But the overall trend is bullish, and the strategy should be to buy select stocks with a short-term view. For the Bank Nifty, there also we are seeing some activity, but it is still underperforming to the broader market. 48,600 is the level to buy for. On the higher side, 49,500 is going to act as major resistance.
And what about individual stocks? What are we looking at, Shrikant?
Yeah, in that space, I think we should look for adding stocks from the defense or railway sector, because most of the time, whenever there is a activity in the market, momentum in the market, we see specific buying interest in these two sectors. IRCTC, which is currently around 1110, 1115, it's showing a lot of strength. It is consolidating since last 3 days after rallying to the extreme points of 1120, 1130. Based on its technical formation, I am of the view that it is on the verge of crossing its all-time high, which was around 1180, 1200 levels. So at this level, it's a buy with a stop loss close to 1060. I'm expecting 1200, 1225 in the near term. And we also like Federal Bank. And there also 163, 165 is going to act as support levels. On the higher side, 173, 175 looks achievable. It is gradually upward moving stock, so it's a buy with a stop loss close to 159. So Federal Bank and IRCTC should be on the watch list.
Okay, got that, Shrikant. Sudarshan, let's come back to you. What about your individual picks?
Well, they are all on the buy side. This market is going up. I'm just saying be careful this week. Aditya Birla Capital is a buy with a stop under 213. That outperformer Maruti is likely to continue to outperform. Buy it with a stop under 12,340. HPCL and REC, both PSUs. And PSUs are likely to remain the flavor of the season. HPCL is a buy with a stop under 498. And finally, REC, a buy with a stop under 509.
Okay, well, let's do one thing. Let's take a quick break on that note. On the other side, we'll be joined by Rajendra Gandhi, the Managing Director at Stovekraft, to discuss their performance for the quarter gone by. Do stay tuned in. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. Well, we have Chandan Taparia, who's a derivative and technical analyst at Motilal Oswal, who's joining us now to talk about individual stocks and what to expect. Chandan, hi, good morning. Wanted to start with the market overall, which has been very strong. Your view on how to approach it from here and what are the stocks you're looking at?
Good morning, Sonia. Thanks for having me. So on last trading session, Nifty made a new lifetime high beyond 23,000 marks. It surpassed the previous lifetime high of 22,795 and momentum was clearly seen in last couple of trading sessions. We have rallied by more than 1,000 points and supports and base of the market is shifting higher. As of now, we believe that till Nifty holds above 22,750, 22,786, this momentum could extend to us 23,200 to 23,350 level. However, the India VIX is at 21.71. We have seen a sharp spurt in the VIX in last couple of weeks. But overall, we believe that as we are expecting the election results, so volatility could be at higher levels. But put call ratio is holding well and we have seen fresh put writing at 23,000 strike. So that is the reason that even after the higher volatility, we believe that overall the strength and the momentum could be on the positive side. So buy on decline could continue and looking for a fresh milestone in the Nifty index. Talking about the Bank Nifty, we have seen a strong momentum on last 2-3 trading session. It managed to witness the recovery. We have seen a spurt in the VIX and short covering was also seen in the banking index. So now till it holds above 48,500, we are expecting Bank Nifty to hit to us 49,500 and heading towards its lifetime high of 50,000 marks. Looking at the stock wise, positive on the selective Nifty Auto stocks. So Nifty Auto is continuously making high top, high bottom. We have positive view on auto like Motherson, Maruti, Bharat Force. But here we are selecting to buy with Motherson Samvardhan. The stock has been making high top, high bottom from last 5 trading session. Fresh built up is being added, which also indicates fresh rally to higher zone. So one can buy with support of 136 and Motherson can head towards 148 level. Second trading area, there is buy on ABFRL. It crossed and holding well above its previous hurdle of 280 zone. We are expecting better rollover with higher rollover cost, which indicates momentum could extend towards 305. One can buy with support of 283. Last trading area, there is buy on PFC. Positive on the power name, including PFC, REC. PFC has given a fresh breakout. Technically, it has given a breakout from its pole and flag pattern on the daily chart, which has bullish implication. We have seen coal unwinding, put writing. Momentum is clearly visible. So one can buy for next leg of rally with a stop loss of 479 and expecting Power Finance Corporation to head towards 515 levels.
All right, Chandan, we'll leave it there. Good talking to you as always. Thank you very much for your time here on CNBC TV18. Well, just going back with Prakash, by the way, the pre-open I think is kicked off. The session is kicked off, 9 o'clock. It's a quiet one as was being indicated earlier. 200 points, let's see. But this is just the first rates and, we'll get a firmer sort of close by about 9:08 market open at 9:15. Prakash, look at the top gaining sectors of last week, right? Friday to Friday, with, by the way, a holiday in between. The CPC index was up 6%. I was looking at all defense names, shipbuilders, BEL, BDL, HAL, between 25 and 35% in 4 sessions flat, basically. So PSUs, of course, has been very strong area, defense particularly there. The metals index last week was up 5%. PSU banks 4%. When one talks about what are the best way to position for the for a favorable election verdict, these are pretty much what come top of mind. But they've all done very well, Prakash. So what is your sense on these spaces near term?
No, that's a real dilemma of sorts, Prashant, because valuations are absolutely not comforting, and it's not a question of whether what kind of a government formation we are staring at next week. It's more to do with how much can these stocks rally from here, and that of course will depend on the underlying business. But if you look at some of these on a bottom-up basis, so for instance within the railway pack, while things have moved up very quickly, you have a company like Ircon, which is actually organically growing far faster than what we had anticipated in the last couple of years. So they've proven themselves to have done very well. They're going beyond the railway domain, and doing things with defense as well. So, you could look at these kind of businesses which are fairly secular in terms of what changes they do. And, PSU banks, for instance, while the rally has probably been a bit sharp in recent weeks, I think that the real catch-up in terms of the growth that you could get, especially the credit growth, and maybe in the second half, if there's a softness in the interest rates and the cost of deposit starts getting much more favorable for them, you still have a lot of them with triggers that are positive. So Canara Bank, for instance, I keep talking about that. We saw 6 months back, Bank of Maharashtra looked expensive at one point in time, but the business change and coupled with the environment that's kind of very conducive for PSUs, that's what you need to kind of play on. But Prashant, I just want to leave you with one thought that while PSUs have become expensive and could get more expensive this week, you have some companies which post numbers didn't do as well for reasons which are more stock specific or company specific. So L&T was a point in case. We've seen how it's kind of recovered from that when people realize that things are actually much better than what we thought. The same thing would happen to a Tata Motors. And why I'm saying that is you look at the positive commentary that's going around with Ashok Leyland, with the Maruti, with M&M. But Tata Motors, just because of the cautionary commentary that we saw, there's a little bit of a sell-off that happened and it's not yet participated the way it could potentially do. So I would look at some of these things from a 6 months to 12 months perspective to latch on to. You can't always, of course, time it perfectly, but I would not add more money into PSUs just because there's a rally expected post the government formation. The budget would probably be the key milestone to watch now, not the election outcome in mind.
Okay, all right. Prakash, thanks a lot for joining in, giving us a lot of fundamental analysis. Wishing you a good day ahead, and we'll touch base later in this week as well. Well, the next company that we're focusing on is Stovekraft. Mr. Rajendra Gandhi, the MD of the company, joins us on the show. Hi, Mr. Gandhi. Good morning, and thanks a lot for joining in. Well, your numbers look quite good on a year-on-year basis. On a sequential basis, the margins have come off a little bit. But for the year, you've grown by close to around 6%, which is quite good, and actually it's better than what your peers have done. But in the past, you have guided for some numbers, and sometimes you've not achieved that. So for the coming year, FY25, what kind of a growth should we be working with? Can you grow in double digits? Can you outpace what the market is growing at? And also in terms of margins, do you get to double-digit margins backed by that big expansion we have seen in gross margins?
Good morning. Yeah, we've been growing the last 5 years at a CAGR of 19%. Last year, on value terms, we have grown at about 6%, but on volume, it is about 19%. There has been a correction in costs last year, but things normalizing. We believe we'll continue to grow at the pace that we've been growing, both aided by our new product introduction and the channel growth, various channels that we are adding.
Okay, so volume growth will be volume growth, sir. Mr. Gandhi, volume growth will be high teens?
Yeah, it will be in high teens. Already.
And what would it mean in terms of revenue growth, sir? Revenue growth as well as margins, if you could help us out with that?
Normally, the revenue growth and the volume growth goes in tandem, but because of the correction in cost last year, there is a disparity, and we believe we'll be able to grow at the pace that we've been growing at the CAGR of 19% that we've been growing. And on the margin, we have improved on our gross margins from the base of last year at about 32-33%. We are closer to 37%. We believe that there is a scope for a little more improvement, which will definitely, with our improved revenue, flow to the margins, that is to the EBITDA levels. And we are quite confident of getting back to that 11%.
Mr. Gandhi, hi, good morning. When we spoke with you in February, you were pretty sort of careful in characterizing the underlying demand environment. You'd said that, well, demand is not very strong, but it is good. It's not weak. As we have entered FY25, could you sort of characterize it for us? How are things looking?
Yeah, so I can say the demand is not great. It is continues to be at the same level or softer when you want businesses to grow. We are able to grow on both these two counts, on our channel growth and the new product introduction. But if the demand comes back to normal or better, and if there is a demand scenario, definitely the growth opportunity for us is much larger than what we currently are growing. So the current, to answer to your question, yes, it's not a great demand times. It is neither very soft, but it's not a time when we are seeing very high demand.
Mr. Gandhi, good morning. Thank you for that. I mean, that's important to understand. The demand is not that great at the moment. Your average sales per store currently stands at a little under 4 lakh rupees. Given the demand is not so good, do you think it'll be hard to hold on to that number?
No, these are early stages of our retail, and we are seeing that as the stores mature, they are able to deliver better numbers. These are because we have more newer stores versus older stores. We are only around a year old. So many of the stores are new. I believe we will settle down in the next 2-3 years, at least twice this revenue.
Twice this revenue per sales per store will double in the next 2 to 3 years, right? That is the kind of guidance that you have. Got it. You've added 31 new stores in Q4. What is the plan for FY25 in terms of store additions?
We will continue to at a run rate of about 25 to 30 every quarter.
Oh, okay. All right, Mr. Gandhi, I recall that you had said, you all will laid out some Capex. I think this was post-COVID. So could you tell us for the last year, what was the Capex spent? And with this incremental Capex, at optimal levels, what kind of revenue number can you achieve? For the last year, you've done 1,350 crores. But at optimal level, with this Capex that you've done, what can you achieve?
We started this Capex cycle middle of the COVID, and the last 3.5 years, we've been investing. We are at the concluding stage of our Capex. Last year, particularly, we invested around 80 crores. And with the overall Capex that we have done, which is about 350-360 crores, and with the concluding Capex, around 400 crores of Capex have been done in the last, we will have invested in the last 4 years. With the current investment that we have done on our manufacturing facilities, we can get to between 2,000 to 2,500 crores of revenue with the existing Capex.
Oh, okay. So effectively, you can nearly double your revenues if demand is good. For the time being, it's a little softish.
Yeah, I don't say again is very bad, but I think the opportunity and the possibilities are very high because at the pace our country is growing and all the macroeconomic conditions. We believe that when the things stabilizes a little more, demand will come back, and with that, the opportunity is there.
Is there a bit of 2 points, Mr. Gandhi? Is there a bit of down trading, just to take that point forward, or no?
No, so we are a cost plus company. We believe on, we want to, of course, have a healthy margin, but whatever is appropriate to our company. And whenever there is an advantage in cost, we pass it on. And if there is a price increase, there is an inflationary trend happening.
No, I meant down trading for consumers opting for cheaper products. I mean, that just to follow up to that demand question. Or no, not really.
I will tell the country is very price. I mean, majority of the population in this country is price conscious. It does not mean that they will go for lower quality products. But if products available at better prices, definitely they will choose this. And they are very, very price conscious. Particularly when people want to save money, then they become more conscious. Currently, I think they're going to that conscious stage.
What about rising sort of underlying prices, steel, aluminum? I mean, what does that do to margins in 25?
Currently, they are coming back to normal. We had an advantage over in the cost last year. There is, compared to the last year, the prices are going up, but it is not very volatile. Definitely, they are coming back to the original levels.
Okay, just one final question. Your revenue breakup, right? You have pressure cookers, LEDs, large amount, of course, comes from pressure cookers, induction cooktops, etc. But do you plan to change your revenue mix over the next couple of quarters?
We will continue to be in the segments that we operate. Our appliances category is performing much better than our main categories of cookware and cooktops. So that is also aiding higher growth. But even in our pressure cooker, we are doing very well on the volume growth. Of course, as I mentioned, there was a correction in the cost which we passed down. So on the value growth, we are not able to witness any value growth in the pressure cooker.
Okay, thanks a lot for joining in. Appreciate your time and thoughts here. That's Stovekraft. But let's get back to the markets now. Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Well, consider buying Maruti with a stop under 12,340.
Okay, all right, Maruti under 12,340. Sudarshan, thanks very much for that. There's 3 minutes to go for market open. We have Conrad Saldana, Managing Director, Portfolio Manager at New Berman. He's with us here in our studios. Welcome to the studio. Welcome to Mumbai.
Thank you. Thank you.
Great to see you.
Same
Always
here.
better than sort of chatting via link.
Doing Zoom.
How are things looking, Conrad? We're in a pretty big week with the elections concluding, long elections concluding and getting to the end of it. Exit polls on Saturday. Let's just start with politics as a quick question. Market seems to be pretty confident about continuity in that sense.
Yeah, coming from the US, talking about politics is a dangerous subject. So I'll just put that out there. Obviously, the market's looking for continuity, right? And what you've seen in terms of infrastructure reforms, they've executed. That's undebatable. So obviously, there's a fair bit now getting priced into it. And when I was here in February, I think we were talking about numbers closer to 400. We'll see what the reality is. But obviously, at the end of the day, they cross the finish line. And they stay in power. You see the continuity of the progress that's already been made. So I think that's the key to it, and taking out the sentiment. Obviously, you've seen the market start to move up a little bit. It's been a little volatile prior to that, but we're pricing in a little bit into the final stretch.
There's been just one thing about it: foreigners selling, and they've been in India in local currency terms. They've sold about 1.2 lakh crores worth of stocks. In 24, there were sellers in 23, 22, 21. It's not stopped the market from doing well. But do you think it's got anything to do with getting the election outcome passed and then they make a comeback in any significant way, or this is more emerging market selling related?
So it's emerging market related, Prashant. To be fair, the locals have sucked in, right? When you think of that 2 billion coming through SIPs, that's filled in more and more, right? Yeah. So it's an embarrassment of riches, right, with the cash flow that's coming into the market. I think for the foreigners, the structural issue has been outflows out of EM as an asset class. And a part of it was China, the underperformance that dragged the asset class down. Nearer term, tactically, that seems to be changing. But I think there should be some reversion to that. Right. But the few funds have been invested in India for a long period of time remain overweight in India, and they see the structural case for it.
And so it's also been large money coming in from domestic institutions, right? I mean, this month almost like this huge amount has come in. So clearly, people are pricing in a positive opening. But we just have a couple of seconds left for the market opening, and then we'll, of course, come back to you. Looks like it's going to be a good one. 23,000 is holding.
Yeah, and we're waiting 50, right, on Bank Nifty. So we'll see. But it's a good start, absolutely. 80 points higher on the Nifty, 23,031. The sensex is starting about 75,642. That's about 230 points in the green as well. So this is, a pretty solid start. As far as the market is concerned. The mid-cap index is up about 1/3%, and I think you've got the small-cap index, which is also starting up. So, I mean, one question which we'll put to Conrad in just a bit is, again, very near term. We'll talk about the slightly longer term as well, but near term, what is the best way to get exposure to play a positive electoral outcome, or is that already in the price in that sense? But for now, it's a solid start with 65 points above 23,000 on the Nifty. But it's all about stocks. Sonia has got that. Sonia.
Well, thanks a lot for that. So, for the index, right, what's really helping with the last couple of days is the Bank Nifty. So I'm looking at the Bank Nifty here, once again participating quite a bit. It's 128 points in the green this morning. And HDFC Bank is the one that has really been participating in the last couple of days. So let's take a look at that. 0.5% higher on HDFC Bank this morning. It's above the 200 DMA. We've seen large delivery-based buying. There's almost 3,000 crores of delivery buying in the last 2 days in HDFC Bank. So keep an eye out on this one. Divi's Labs is the other one that I'm looking at. 2.5% higher, post a strong set of numbers. The margins for Divi's Labs are above 30% for the first time after 5 quarters. Jefferies has also raised their target price on the stock, but it's still below the current market price. So a lot of perhaps brokerages are late in the game there. Aurobindo Pharma is the other one. The results have beat estimates. The revenues are up 17%. Margins actually 100 basis points higher than what the street was estimating. I'm also looking at Bosch. Decent set of earnings coming through this time around. The margins are above 13% for the second quarter in a row, although the top line growth has been in low single digits. But Bosch is now climbing fast, 3.5% higher on that stock. On the flip side, Nazara Tech is the one that is slightly disappointing, down about 2% odd. Revenues are down 8%. EBITDA is down about 85% year on year. So something has really gone wrong with Nazara Tech. The profits, remember, are aided by higher other income. So the street definitely doesn't like the fact that there is contracting EBITDA for Nazara Tech. The other stock I'm looking at is Ashok Leyland this morning. As you heard, the management commentary was very positive. Citi has a buy. They've raised their target price to 245. Jefferies has a hold, but they have raised their target price to 205. So brokerages are bullish on Ashok Leyland, and management was also quite sanguine. And the other stock I'm looking at is Glenmark Pharma. They are targeting a double-digit profit growth in FY25, and they are targeting an EBITDA margin at 19%. So Glenmark Pharma also looking pretty good. But let's get back to the overall market. This is good. The fact that after a big rally last week, the market is holding on to 23,000, led largely by the Bank Nifty, which is up 140 points. So over to you guys, looking like a decent start.
Well, that's right, Sonia. Bosch is the big one, up close to around 4.5% as we speak. And, from the FNO pack itself, you have Hindustan Copper. That one, well, valuation-wise, it's out of back, trading at more than 100 times. So that's on a trailing basis. The margins are around 40%. The street likes that. HCC, that came out with its set of numbers. That's coming for a bit of a pullback, down close to around 3%. One of the top volume movers on the downside in today's trading session. So HCC down 4%. IQ Lighting. Those numbers are very, very disappointing. This is one of the recent IPOs. The critical point out there was the EBITDA margins contracted by close to around 400 basis points. Came in at around 18%. That compares with around 22%. And from the peak, I think the stock is nearly half. Cochin Shipyard is flying away though. They reported an EBITDA of around 280 crores. That compared with an EBITDA loss. So the street likes that. You have Moscow Dock as well. That's up close to around 6%. So that one as well gaining big time. Forgings, I'm not sure what's the piece of news out here, but that one is up close to around 10%. The street has been talking about this valuation gap with Bharat Forge, but that one today is up close to around 12%. So that's one of the big gainers today. Johnson Hitachi, well, for the second day running, that stock is up close to around 10% as we speak. So big up move is what we're seeing. And on the flip side, your Best Agro, that stock is down close to around 6%. It's nearly half of what it was just around 12 months or so ago. Prashant, what else?
So it's once again a repeat of what we saw broadly. I mean, if you want to see where volumes are, where the price is moving, it's PSUs. Without a doubt, it's PSUs. The CPSE index was up 6% last week, with a holiday thrown in, right? So in 4 days, 6% gain on that index, and it's that space again. So look at this. Cochin Shipyard, biggest volume-led gainer, 7%. There's RVNL, which is up 6%. Moscow Dock is up 5%. Bharat Dynamics is up, BDL is up 4%. IREDA is up 4%. These have got some of the largest volumes. That is Garden Reach, another shipbuilder, is up 3%. RCF is up about 7% or so. There is, that kind of concludes the list of the biggest volume-led gainers as far as what's coming up. And of course, some of the earnings reactions you guys talked about, Torrent Pharma, and there is Affle, which reported numbers. Inox Wind has got about 6% gains. We'll be speaking with Suzlon a little later on the back of their numbers and outlook going forward. On the downside, Adani Group stocks are up about 20-25% in short order going into these over the last couple of weeks. Actually, Enterprises is down 2%. It's got large volumes on it. There is Karnataka Bank, which is down about 3%. EIH Hotels. Zaggle is coming up with about a 2.5% cut as well. So it's quieter on the downside. Bulk of what is happening on the upside with decent sized volumes.
Just one or two more stocks. Nazara Tech, there's some news flow that the founder, Mithir Infotech, has sold almost 6.5% stake via the block deal. We had just flashed that a while back. The founder's stake sale is to the existing investor, Plutus. So, that's an additional reason. Of course, the numbers are also weak for Nazara Tech. The revenues have fallen. Margins are under pressure, and now the founder has sold some stakes. So that's one stock I'm looking at. The other one on the upside is Exide. There are multiple brokerages that have raised their target price on Exide. Morgan Stanley has raised it to 567. Nomura has raised it to 589. So that's another stock that I'm looking at. And then you have the entire defense space, which was a big mover last week. Once again, all of these defense stocks, whether it's, you have something like a BEL fresh high there, Masgao Dock fresh high, Astra Micro fresh high, Garden Reach Shipbuilders fresh high. So this is one space that has been doing really well. But we, of course, have Conrad Saldana sitting here with us. Conrad, thank you for your patience. This is a market that has been up and away, right? And large money coming in from domestic investors. Whatever be the outcome of the elections, do you reckon that barring the fact that if there is a large upset, of course, things could turn differently, but do you reckon that this is an uptrending market that one should still participate in?
Tough call, Sonia. I think for us, I would say nearer term valuations might be the struggle. Fundamentals look good, they're executing, but it's also patchy, right? So I'll just highlight that. Your manufacturing, infrastructure, even defense-related names, you're seeing the numbers come through, right? But on the flip side, I would say for consumption broadly, it's been a soft patch, right? IT, after listening to NVIDIA, that's a massive strategic shift, that's inflection that's happening at, almost once in a decade, you see that. So that needs to adjust itself. So there are pockets of it, and when I look at, the bank's numbers are somewhat mixed. So it's not all smooth sailing when I look at it fundamentally. So everything gapping up and moving up, I think a rising tide is definitely in play here. So I would just be a little bit more discriminatory in terms of what I buy and be very selective on companies that are executing, they're growing in terms of their volumes, right? Yeah. Price, hopefully not too much of a negative, but that's where I would be deploying capital. But, just moving away from a broader story.
All right, Conrad, good to meet you, first of all, in person. And thanks a lot for coming down to our studio. Let's get a couple of names out of the way. The last time you were down, we spoke about, I think, Jyoti CNC, Ask Auto. We, in fact, interviewed the management a few days ago. And a few other notable names as well that y'all got into. CMS, I think, was the other one. Give us a list of a couple of stocks that, y'all have recently got into, which has a good runway.
I think for the names you mentioned, we're still very positive on them. I think there's a long runway. It's much more structural. If you talk about the EMS space, we have owned Canes for a long period of time. We probably had much more exposure broadly. But I think the two folks who are executing, one is Dixon's, right? They're kind of the gold standard of the listed space in terms of just getting those volumes out there. If I can go back 15, 20 years, whether it was Nokia, Ericsson, they've really come along. It doesn't matter which the client is, right? They've really adjusted themselves. Canes is the other one that I think is executing, going from more PCB, box build, OSAT, ODM manufacturing. So I feel good about that business structurally longer term. The other, ASK still, the numbers, post the IPO, there was a soft patch in terms of the quarter. Now you're seeing them deliver coming through, and so whether it's a 38% growth in revenues is a very strong number from the team there, Mr. Rathi in particular. If I move on to potentially Venus Pipes. Again,
that's something that you'll have liked for a long time.
For a little while, and like I mentioned the last time, Nigel, we don't turn over our portfolio that much, and when you're buying the smaller names, you're generally believing in the compounding of this business over the long period of time. But Venus Pipes would be one that I, again, see whether it's seamless, it's welded pipes, they're moving more into fittings. Again, volume growth of 40%.
Indeed.
For EMS companies like Dixon and Canes, Conrad, what are valuations at now? And for people looking to get fresh exposure, does it make sense? I mean, if you already own it, great, you're making money.
Yeah, Prashant, your point is fair. It's a tough one. Dixon's, you had those opportunities where the sell-off, right, and you get a 15, 20% correction. Now, putting new money, if you have a longer-term view of 2 to 3 years, they're going to compound, and the order flow coming through, they start to do more in terms of CPU, GPUs coming out. It's going to really inflect.
No, we had the management with us a few weeks ago. They said they did about 18,000 crores in revenues in 24, and they told us that for 25, then that number would be north of 32,000 crores. So that's a big inflection.
Big inflection already.
But margins, of course, are for this kind of a business are small. But what would you be willing to pay for? And would you look at cheaper names, maybe Amber? I don't know. I mean, would you go down that road?
Prashant, I would put it that in terms of execution, having gone through this and looked at the US names, Taiwanese names we also invest in, Dixon's has delivered. Now, the business model, to your point, is that margins are lower, but their turns are as good as anybody. And so you look at return on capital is really solid. Canes has higher margins than them. They're about, EBITDA margins are probably in that 14.5% to 15% range, and still good ROC. So that's another one. I'd say, depending on growth. Now, I do believe these businesses can grow at 30% or so. I'm not going to say 50, 70% is sustainable when you look at a 5-year ramp. So if you're paying, on a PE multiple in that range, probably makes more sense. You get those opportunities. Dixon's has never been a cheap stock. You get disruption from one customer to the next. The market gets myopic about a quarterly number, and that's your opportunity to buy it.
And look at the way the stock has moved, right? 150% in the last 12 months. Conrad, the last time we spoke to you, you said that if you get an opportunity, you will buy into private sector banks. But you were a bit skeptical about the way the HDFC Bank had done communication with their investors, etc. All of this happened, a few months ago. But at this point in time, there's a lot of buying seen by domestic investors in HDFC Bank. What do you do now?
I think if you have a longer-term view, HDFC Bank is still a franchise. And as I mentioned the last time, and you rightly said that, Sonia, is that one was communications. The other thing is, I think for all of us, we have to be practical. These are two big businesses coming together, right? There's a piece of the book that needs to be recycled, figuring out deposits and restarting the engine. So I think and we have to keep an eye on management changes, right? And any exits there, that matters. This is a people business, right? The business, I think, is solid longer term. I would say, and it's valuations, when you think of it. This was a business that used to trade at 4 times book. The other one was Kotak, right? Was on the private sector, was at massive premiums. And now they're trading at the low end, and the gap between PSU banks has shrunk massively, right?
So what does your order of preference look like in the banking space now?
So I would say we're still more exposed to the private sector. Okay. The name that we're very excited longer term about is Chola. Again, fantastic collections. It's about collections that matter. I'm a little more cautious when I think of the lower end of the spectrum in India. When I think of lower incomes, people are getting marginalized and squeezed because of inflation. So you're starting to see that manifest itself. Microfinance, I think you're going to see those uptick. I'm seeing that right now in Indonesia. And it seems like a very similar playbook that's evolving here.
Sorry, uptick in?
In non-performing loans, ability to pay, people getting squeezed. So I think that's something I would just be a little bit more cautious about. I would say consumption at the low end, does that migrate to the mid-end consumer if it persists for a long period of time? It cannot be that K curve that we talk about. So just to balance out the maybe optimism that maybe there are green shoots we're talking about when you speak to the FMCG companies, right? Dabur, Leavers are talking about something. We'll have to see that. Is that a continuation of that? Is that just prior to the election? Is that being helped? Urban migration. So there are a lot of nice stories around that. We'll have to just see a continuation of that, of those green shoots.
Well, that's right. Chola, as we discussed last time as well, may not be cheap, but plenty of room to grow and compound from here on. Well, Conrad, we appreciate you coming down to our studio, discussing the markets as well as all those stocks. Wishing you well, and we look forward to chat up with you post the election.
Thanks, Prashant. Cheers.
Well, for the time being, let's shift focus to Hindalco. It reported a good set of numbers. The total India as well as the copper business put it together. Well, it beat our estimates by a goodish margin. To discuss this and more, we have Mr. Satish Pai, the MD of Hindalco, who joins us. Well, Mr. Pai, thanks a lot for joining in. Aluminium prices, well, they have seen a big surge. But what is sustainable with regard to a per-ton basis? What are you factoring in?
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600.
So there has been a steady improvement in the aluminum EBITDA per ton of the upstream business. How much higher can it move from these levels?
Absolutely. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
Okay, do you want to give us a range on the aluminum EBITDA per ton and what you expect going forward?
Well, I'll just tell you that it's going to be higher.
So we'll take that then. Q1 EBITDA per ton will be better than Q4. But Mr. Pai, the other surprise was the copper segment. Delivered blockbuster numbers. EBITDA coming at more than 750 crores. But what is a sustainable number we should be working with on a quarterly basis for the copper business?
So I think Q4 was a little bit exceptional for copper in many ways. The demand for copper rod was very high. If you look at it, we had a record sales of 135 KT of copper. So combined with high LME, that gives us a better margin. I think Q4 was very exceptional. But that being said, the Indian demand for copper is very high. So we think going forward, the 600 crore type of EBITDA range should become the new normal.
Okay, so 600 is more realistic and sustainable for the copper business. Got that. The Novelis EBITDA per ton, well, that's improved over the past few quarters. Could you give us a range on that front?
Unfortunately, due to the federal securities laws and the quiet period we are in for the IPO listing, I cannot be talking anything about Novelis on this call. I'm sorry about that.
All right, Mr. Pai, but at least give us a timeline on the Novelis IPO or a rough valuation. Now, some reports are suggesting 50 and 60 and $18 billion odd. Give us some kind of a number.
I cannot talk anything about the IPO listing because of the restrictions.
Understood. Can you guide us for what the Capex could be for FY25?
So we spent 4,200 crores last year. Our current plan for this year is 6,000 crores. A large part of that will be the completion of the FRP project that's going on. But a number of new projects are starting, which is the battery foil, the copper recycling project. We are going to be looking at the alumina refinery in Odisha that will get off the ground this year. So I think for the next couple of years, you're going to see a 6,000 to 7,000 crore level capex going forward.
Okay, then what's the outlook on the debt levels? You know, steadily it's been coming down. If I look at it in the last few quarters, steadily you've been reducing the net debt levels as well. Tell us more.
So look, the point is you have to separate the two balance sheets now. And if you look at the India balance sheet, we are net debt negative. We have about 11,000 crores of treasury and we have only about 7,200 crores of long-term loans. So and we will be generating cash. So I think that spending 6,000-7,000 crores per year on capex just from internal accruals is completely feasible.
Mr. Pai, could you give us a debt guidance though? You know, what does it come down to then?
Depends on how much the results of this year look like. If the LME is very good, we may even prepay further long-term loans. But currently our plan is that the long-term debt, by the way, there's nothing due for the next 2 years. It only comes in FY27. So we don't have plans to prepay debt anymore, but it will depend on how the cash generation goes.
So your business is dependent on TCRC, while Hindustan Copper is a play on LME copper prices. Since Hindustan Copper prices have zoomed, are you still interested at these valuations?
See, ultimately, any opportunity that comes will be evaluated, and if it makes sense, we'll take a look at it.
All right, Mr. Pai, thanks a lot for joining in and giving us all those details. So just to recap things, aluminium prices should stabilize at around $2,400 per ton. The aluminium EBITDA per ton will be better in the coming quarter in comparison to the past quarter. And copper, on a realistic basis or a steady state basis, should hold at around 600 crores on a quarterly basis. That compares with around 770 crores in the past quarter. For the time being, we're slipping a short break. Come back. We'll have this interesting chat with the CFO of Suzlon. Stay with us.
Welcome back. This is Corporate Radar. You know, the market is doing great. It's not so much the headline index which is holding on to its gains from last week. It's really the broader market participation that is astounding. I mean, the mid-cap index is now up almost 0.8%. The market breadth is positive and plenty of stocks are hitting all-time highs. So there's so much participation beneath the surface. But let's focus on Suzlon Energy. It reported a good set of Q4 numbers. The revenues went up 30%, margins expanded, but the net profit slipped 8.6% year on year. We have Himanshu Modi, who's the CFO of the Suzlon Group, joining us now. Himanshu, hi, good morning, and thank you for speaking to CNBC-TV18. You know, the execution in the whole fiscal, right, in FY24 has been a bit underwhelming, despite the kind of very strong order book position that you're sitting at. There was an expectation of 800 megawatts of execution, but that did not play out. What led to this? And now that we are in election season as well, what do you see as the way forward over the next, in the first half of FY25?
So, morning to you and your viewers. Firstly, let me just summarize our annual results for the viewers. So we did 664 megawatts of deliveries in FY23. As against that, we've done about 710 deliveries, megawatts of deliveries in FY24, registering about a 7% growth. From a commissioning perspective, which is what the actual turbines getting connected to the grid, we did 495 megawatts in FY23 as compared to 882 megawatts in FY24, which is a 78% growth from a commissioning perspective. Revenue, of course, registered a 9% growth to 6,497 crores in FY24. Now, operating parameters also have significantly improved for the company. For the full year, we registered a EBITDA growth of about 24% to about 1,029 crores, and a net profit PAT before exceptional items, which is the key word.
Mr. Modi, yeah, we actually know all of that data because it's already there in public domain. We want to just understand the way forward. What is the kind of execution that you're looking at? You know, what is the realistic target that you can have in terms of tendering of orders, etc. So if you can just help us with those numbers on what the way forward will look like.
No, I just wanted to correct because, you started with a drop. That is incorrect because our net profit before exceptional items is what you need to look at from a apple-to-apple basis. So when you register or revenue reporting that a net profit is dropped, I'm sorry, unfortunately, that is incorrect, even on a quarter-on-quarter basis. So the numbers are there on a Q4 to Q4 basis. Our net profit was 68 crores last year, which has grown to 281 crores this year, registering almost a 110% growth. So those numbers, as you said, are there for you to see. Now, going forward, of course, we never started a year with a strong order book. We have about 3.3 gigawatts in order book that we're starting the year with. And as I mentioned, we have had a good execution growth in FY24. Whilst I can't give you an exact number on what we'll do in Q1, but suffice it to say that from an execution perspective, we are already from an industry Suzlon perspective. And also we start the year with a fairly healthy order book and, of course, a healthy balance sheet.
All right, Mr. Modi, hi, good morning, and thanks a lot for clarifying on that front. So I'm reading from a brokerage note. They're expecting you to execute close to 1.5 gigawatt in FY25 and then 2.5 gigawatt. So your order book is very, very good. But some part of the street is a little bit disappointed on the execution front. So tell us, does 1.5 gigawatt sound feasible for the coming fiscal? And also you gain market share in the past year. If the way sell-side analysts do calculate it as well. Do you expect to further increase your market share, I think, from around this 27-28% on?
So again, the country did about 3.3 gigawatts this year in commissioning. Now, our expectation is that, the country will be around 5 gigawatts in FY25. Now, whether we are able to maintain the market share or increase the market share is individual analysis. So whilst I can't comment on the brokerage report they're talking about, but if the country does 5 gigawatts, which is what our estimates are, and we're able to maintain a market share, even if not increase it, then, I leave the math to the analysts and the viewers.
So the math is there, 1.5 gigawatt then, presuming that 5 gigawatt is done in this year. Are we getting that correct, right?
That's our estimate, that the country should do 5 gigawatts this year. Yes.
And just to clarify on this order book that you're holding of around 3.3 gigawatt, it includes the recently won order, right?
That's right. So a lot of these orders, if you see, the street sometimes gets impatient. A lot of these order books have been ramped up by us in the last 4 to 5 months, right from January until May now. So, these are long-dated projects. People have now started, our customers have started planning almost 2 years in advance for the project execution schedules. And a lot of these orders, as I said, have been secured by us in the last 5 months. So we have those capabilities. It will take the time that it takes. So, we are very focused and on the patient and timely profitable execution of all of these projects.
Yeah. Himanshu, hi, morning. Prashant here. Now, impatience is the other name for the street. I think there's no doubt about it. But yeah, I mean, that's to be expected, right? And you're very well aware. So if you do 5 gigawatts of, so not you, but the total installation in the country is 5 gigawatts in FY25. I was listening to the call, and in FY26, Mr. Chalsani said that number could be between 7 and 8. I mean, at least that's the expectation. And FY27, it could be between 9 and 10. So would it be fair to kind of model taking a 30% share for Suzlon? That's the trajectory we're looking at?
So yeah, I mean, whilst those numbers are broadly correct in terms of our internal estimates and what Mr. Chalsani had said earlier in an interview with you guys, we need to also step back and see that the policymakers are very clear that the wind industry or installations by 2030 need to get to close to about 100 gigawatts. We are ending this financial year FY24 with about 45 to 46 gigawatts as an industry. So, steadily increase over the next 6 years. I think the industry is all geared up to meet that target of 100 gigawatts by 2030.
And another thing which I think bears watching is how much the centre starts to get involved, right, to sort out some of these land issues, because I think that is the big challenge in terms of getting fast-tracking some of this stuff, some of the numbers we're talking about. On margins, Himanshu, if you can guide us, because you've got a situation where commodity prices are hardening, and it's not just what's already happened, but forecasts also are suggesting that there's generally an upward bias for some commodities more than others. But will that be a bit of a headwind? So if you can guide us for FY25?
So again, whilst we don't provide any specific guidance, but I can generally talk about splitting our 2 or 3 key business segments. The maintenance or the O&M, as we call it, there I think we are sustaining an operating margin or EBITDA margin of about close to 40%. So I don't see any reason why we should not be able to continue to do so for FY25. So long as our manufacturing business is concerned, we've always historically registered mid-teens in terms of contribution of gross margin. Of course, this year we've ended with about 19.5% gross margin on the manufacturing business. Now, whether hardening of some of these commodity prices, we're able to maintain the margins, or there may be some slight impact on those margins, is something time will tell. But I think our margin profiling for the manufacturing business should continue in the mid to late teens vicinity for FY24.
So can you give us some more numbers, Himanshu, on the revenues and on the EBITDA? What are you targeting for the full year? On an average, you're sitting on about 2,200 crores per quarter in terms of top line. So what is a fair estimate of what FY25 could look like in terms of revenues?
So again, splitting our business segments, the O&M revenue would have a secular growth, which is linked to inflation going forward, at least in FY25. So far as the manufacturing business is concerned, it depends on the volumes we are able to deliver. Of course, our average selling price per megawatt, we maintained a little shy of 6 crores per megawatt. So depending on how much we are able to deliver in FY25 would determine the revenue that we do in the manufacturing business for FY25.
So O&M as a percentage of the top line is around 25 to 30%. Is there expectation that that would improve further? And in terms of O&M margins as well, what are we looking at in FY25?
So O&M, you're right, for FY24 is about 25 to 30% of the overall pie. But should the overall pie increase, O&M pie, the pie would reduce for O&M because the manufacturing does increase, that 25 to 30% will reduce. And as I said earlier, from an operating margin perspective for the O&M business, we should be able to maintain about 40% operating profits.
Got it. Mr. Modi, what about, competitive intensity on ground? Are you seeing more number of players, come in? Are the Chinese players like Envision as well, hurting the market? Tell us about the competitive intensity in the space.
So, certainly there are certain Chinese competitors that are quite active in the Indian marketplace. But, the demand is such that there is room for all of us to play. I mean, as you can see, as you rightly said earlier on in the call, from 23 to 24, we've increased our market share from 22% last year to 27% this year. And, this is a complicated piece of engineering. I mean, it's unlike solar, which is just panels, largely commodity. This is a complicated piece of capital goods. So Suzlon, at least has the competitive edge of the only turbine that is designed specifically for Indian conditions, whereas some of our other competitors that are coming from the Western or Eastern markets, as the case may be, necessarily don't have that competitive edge. So whilst there's certainly room for all, to flourish and play in the marketplace, but I think from a Suzlon product strategy perspective, we have our USP clearly cut out.
Okay. So, you've given your execution targets, right? And you've told us what your current order book. This has been your largest ever order book at 3.3 gigawatts. I just want to understand what's the order visibility. Over and above this current order book, what kind of visibility do you have over the next 12 to 18 months?
So it's a fairly active, negotiations on quite a large order book with different customers that is currently going on. Of course, I won't be able to provide any specific numbers. The street will hear about those orders and then when we announce those. We have a fairly clear policy on when we get back to the street on the order announcement. But suffice it to say that negotiations our team is doing with quite a few customers on quite a healthy order going forward.
All right. Himanshu, we'll leave it there. You find yourself in a pretty good spot and there's a fair bit of tailwind and hopefully, the bidding out process and then finally the ordering, etc. will continue at the pace at which it has. So thanks very much for joining us with that perspective for 25 and beyond as well. So that's Suzlon with some perspective. DLF is the next company that we are focused on and we have Mr. Ashok Kumar Tyagi, Managing Director at DLF joining in. I mean, FY24, of course, was fantastic. The pre-sales guidance was surpassed, big time. And now for FY25, the guidance is, of course, 17,000 crores. Mr. Tyagi, good morning, sir. Thanks very much for your time. As always, Prashant this side. Could you give us a sort of on-the-ground assessment right now, as we speak to you right now? Are things as good? I mean, because things have been pretty good for a while. How is demand holding up? Sort of a project uptake? Is it going as fast as it has over the last 12 months or so? What about pricing? Just an overall sense before we go into details.
Okay. So frankly, Prashant, now it's been almost, I think, in excess of 2.5 years now. And I think the demand's been holding up. In fact, it's strengthening almost quarter on quarter, I'd say. We did the second phase of Privana launch in end April, early May, and I think that also sold out in a period of 3 to 4 days. So the demand's holding up, the pricing trends are holding up, our execution machinery is in full shape, and I think not only the residential, even the commercial side of the equation, which is both the office leasing and the retail leasing, are both strengthening almost on a quarter by quarter basis. So overall, this is relatively, I think we're in the midst of a virtuous cycle.
Hey, Mr. Tyagi, good morning. I mean, this has come after a long dry spell that the industry had, right? So yes. I think it's your time to shine now. But tell us this Lux 5, how much is it likely to contribute going forward? I mean, Camellias too. I just want to understand, what is it's of course premium property, right? The pricing is expected to be 50 crores upwards. So what is the kind of contribution that you expect here? And how much will it add to your, revenue target over the next 1 to 2 years?
Okay, so good morning, Sonia. I'd like to clarify that Lux 5, Camellias 2, these are all broker-assigned working titles. We haven't titled the product yet. We haven't, it'll be properly brought to the market post-RERA and everything. So I think it's still possibly a quarter away. Having said that, yes, you are right that we are proposing and planning to launch another super luxury product on the Golf Course Road now that Camellias is almost sold out completely. I mean, I wouldn't hazard a guess on the ticket size, but in our pipeline sheet in the analyst presentation, we have right now ascribed a potential launch value of 20,000 crores to this project, which in all fairness could be exceeded given how the pricing trends for that segment have been. In the first year, given that we'll be launching only towards maybe, August, September, we have right now been conservative, and of the 17,000 pipeline, we have only ascribed about 3,500 crores for Lux 5. And the balance 13,000 crores plus is actually being based on all other launches, excluding Lux 5.
So your launch pipeline is for FY25 is about 11.6 million square feet, right? Is that correct?
Yes, yes, it is, ma'am. Yes.
Okay, and how much of that will be in the first half of the year? What is the kind of execution that you're looking at in H1?
So, Sonia, Q1, of course, is not going to see any significant launches, except Privana Phase 2, which has already happened in April end, which was about 6,000 crores. I think 5,700 crores. I think in Q2 we should have the Goa launch, hopefully if all goes well, which is a super luxury villa launch in Goa. And I think maybe towards the last phase of Q2 or early Q3 is when you should see Lux 5. Mumbai should happen again late Q3 stroke early Q4. We are targeting late Q3 as of now. And the next phase of Privana should hopefully happen by Q4. In addition to that, there will be smaller launches of commercials and some launches in Tri-City Chandigarh, which will keep on happening through the year.
All right. Hi, good morning, Mr. Tyagi. Always good speaking to you. I can feel the confidence in your voice. I think sweet spot for real estate companies, and you're fitting in perfectly well. What's the probability you go ahead and give the street a pleasant surprise? Last year, you had earlier guided for, I think, around 13,000 crores of pre-sales. You ended up with a 10% beat. This time, you're talking about 17,000 crores. Are you likely to overshoot that as well? That's point number one. Point number two is on the rental income. You've done around 4,300 crores. What's the outlook for this year?
Okay. So, Nigel, on the sales guidance, as I mentioned just now to Sonia also, of the 17,000 crores, I think we have been fairly conservative on our guidance towards Lux 5 because that will be a super luxury project. And I think there's a fair chance that we may beat that guidance. By how much, I guess we'll have a more accurate ear to the ground by December, because most other projects that we are launching, we are pretty much banking on them selling out completely during the year, So I think hopefully by October, November, we'll know broadly whether the 17,000 is being exceeded, and if so, what's a reasonable degree of exceeding it by. On the offices piece, as you mentioned, while our total rental income last year was about 4,300 odd crores, our exit run rate as of March 24 is now running at about 48 to 4,900 crores for the fiscal 24-25. And we expect that by March 25, our exit run rate should be almost touching 6,000, because about 3 odd million square feet of our developments should be completing in Chennai and getting into rent commencement mode this year. And the downtown in Gurgaon, which last year only had a few months of rentals, this year will be a full year rental. So we are expecting about a run rate of about 5,000 crores, 4,900 crores exceeding March 24, and going to about 59 to 6,000 crores by March 25.
Interesting. And just to sort of, you said that in the 17,000 pre-sales guidance, this luxury project is you're accounting only 3,000 crores, right? Out of the 20.
I think 3,500 if I'm not mistaken. Yeah.
Okay, and that number could be bigger. I was speaking recently with somebody in Delhi, and I was talking about the club facilities, etc. in Camellia, saying they're absolutely world class. And do you offer those memberships to outside sort of residents as well?
No, we don't, but we are more than happy to have a visiting media delegation go through it.
No, not for me. I mean, this gentleman I was talking to was saying that there is. So it is for the residents, right?
Prashant, all of these club facilities are for the residents of that specific condo, in that sense. So obviously, teams keep on doing events, etc., where obviously outsiders get invited. But on a repetitive basis, the usage is restricted to that's been the case with all of our clubs, Aralias, Magnolias, now Camellias, and hopefully going forward as well. But Aglibar, when you come to Delhi, I think, you must let me know pehle, and we'll take you through the club.
Prashant, it's an upgrade coming there, Prashant. Going to keep an eye on this.
Is this a big part of the entire package, Mr. Tyagi? When you launch these super luxury projects at these, these price points, which arguably there is demand for, but it just seems, obviously really top end, right? So is this a large part of the offering in terms of how you're able to market it?
So in all fairness, yes, I think clearly the club and all the facilities that come with it, are clearly, I think a major USP of developments like this, I mean, and on the Golf Coast Road, be it Aralias, Magnolias, and Camellias across the span of about 2 decades. I mean, each of those projects, when they were launched, were definitely, way beyond what the market was offering, even in a comparable price segment at that time. And we hopefully, in fact, if you may or may not recall, Prashant, there was a time around 2018-19 when the Camellia sales had stalled.
Yes.
And we remember we'd spoken and we used to talk about how many units
we had spoken at length, we had spoken at length. There was a quarter, I still recall a horror quarter where about 25 Camellias cancelled, I think 2018 came up. But then, in all fairness, I think A, the market sentiment, and B, once the club commissioned a couple of sample apartments in the Camellias commission, and then the sales that have begun subsequent to that, I think have been extremely strong sales, in that sense. And now I think we are left with, I think, less than 15 apartments.
Okay, Mr. Tyagi, I have to ask you about the Mumbai market, right? Because anyone and everyone who is someone is entering the Mumbai market, and DLF is not too far behind. I mean, you've invested 400 crores for that 51% stake in that SPV in an Andheri project. But tell us a little bit about what the overall plans are, not just for Mumbai, for Goa as well. What kind of potential do you see here? Okay. What could the growth look like for you?
So first I'll tell you Mumbai. Mumbai obviously is the country's biggest real estate market. I don't think that there's any doubt on that. We ourselves did not have, we had one great property which we, as you know, we sold to Lodha about 10 years back. And I think they've done a great job of developing that property. We had another property, another joint venture that we had, which unfortunately ran into rough weather and is currently involved in litigation. So we were sort of, we were very gingerly about re-entering Mumbai. This is a project which hopefully over time can have about a 5 million square feet development potential in Andheri West. Right now, I think we have done our partners have done the slum rehab, etc., to get the first 1 million odd square feet of saleable area cleared. I think that's what we propose to launch hopefully by Q3 or early Q4 this year. So first of all, let's see how this piece pans out, how is the sales engine there, how is the sales velocity there, what are the price points we can get. And then, hopefully if this gives us confidence, we can look around to a couple of more projects in Mumbai. But right now, we are only focused on this one in Mumbai. And in Goa, in contrast, Sonia, we had these 3 land parcels for, I think, for the last 15 years.
Okay, I think there's some issue with the audio and the video. Sorry, Mr. Tyagi, will come back to you. But we got that. We got your, expectations, at least from the Mumbai market, and you're hopeful of surpassing your full year sales guidance as well. By the way, the market has taken a turn for the worse. So the Nifty is now in the red. The real action, as we were telling you earlier in the morning chat as well, is in the Bank Nifty. So the Bank Nifty is almost, climbing towards that 50,000 mark. It is the big outperformer today, led largely by names like HDFC Bank. But other than that, the Nifty is very, very quiet. So, not too much happening over there. Sachidanand Uttekar, the AVP Technical Equity at Trade Bulls, is joining us now to talk about that. Sachidanand, thanks a lot for joining in. So this market has been uptrending. It's been hitting new highs, but now it's a big week, right? There is election week coming up, counting day, exit polls, etc. How are you, what are you advising traders to do in this week?
Good morning, Sonia. And clearly, I think if you look at the run-up towards this event, it has been substantial. In fact, Nifty has, reconfirmed that particular base at around 22,000. And from then, since then, we have seen this high top, high bottom sequence well intact in the market. For the last 12 trading sessions, Nifty has never closed below its previous day swing low. So that is a good, sequence to gauge the strength, underlying strength of this particular trend. So I think unless we don't see the Nifty, slipping below or closing below that 22,800 mark from here on, I think the momentum on the higher side should continue. Yes, there are hurdles at around 23,000, but we don't see that particular level, disturbing the expiry move, and we may see Nifty, expiring somewhere close to around 23,450, 430 kind of a zone. So clearly, I think the declines that we are seeing even during intraday should provide another opportunity to create long positions. So from a trading perspective, we are expecting that the market should scale higher towards that 23,450 kind of a mark during this particular week itself, and that's why we are recommending building long positions here. From an intraday perspective, I think the decline towards 22,900 should be considered healthy. For the day, we don't see the Nifty closing below that 22,940 kind of a mark on a closing basis, and we may see again a reversal here setting in. So I think this dips is a good opportunity.
All right, dips are a good opportunity. Markets, by the way, it's flattish, right? Sachinand, thanks for that. Okay, I think you have some stocks as well, right? Specific stock trades.
I think TCS from here on. In fact, Nifty IT has been a good contributor last week. We have seen a good revival here. The Nifty IT index itself is trending confidently above its 200-day exponential moving average, which is placed somewhere close to around 33,800, and that's why we see that there could be some more run-up on the upside. TCS, we have seen a good positive divergence on the stock. We have seen a good contraction here on the price scale, from which we may see an expansion towards 3940, 3960 kind of a zone. So that's why we are recommending building long positions here. One can keep a trading stop loss somewhere close to around 3846, and fresh deployments can be done in TCS.
Okay. All right. We'll leave it there, Sachinand. Good speaking with you, and we'll come back for more as the day goes by. But we're down about 15 points. Look at the advanced decline. I think that is the real story, with 1,500 stocks lower and about 800 stocks which are higher at this point in time. So in the broader market, I think there has been a bit more of the worsening we've been talking about. We'll take a break. Manisha will sort of put the spotlight on commodities once again. That's coming up in a bit. Stay with us.
Well, let's focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the sugar prices, and globally we've seen some profit taking come into this one from the highs of 2024. The prices have been under pressure because there is increase in short positions coming in from traders and speculators, and they are taking money off onto this one. And they have been doing that for the last couple of months or so. I want to take you through the prices on how they have been. So we started this year in sense of raw sugar prices at around $20.9 per pound there. The high that we saw came also in the month of January at 24.5, and then a very steep profit taking and took the prices all the way to 18, and we're trading at 18.4. The markets do believe that 18 as of now is a rock solid support for the sugar prices, but because from here on you could be looking at the demand going forward on the higher side as well. I also want to take you through the USDA report for the 2024-25 year, where they are anticipating an record production and record consumption as well in the global markets there. The higher production clearly seems to be coming in from Brazil, from Thailand, China and Mexico. Many of these countries actually are not making as much ethanol as they are doing in sense of sugar because of the higher demand, and also because the crude prices are trading at a 3-month lows. Ethanol is not very profitable right now, so there's a lot of sugar that is being produced in the international markets there. So when you look at the production and the consumption numbers, it's a record number for this season at 186 million tons of production and 178.8 million tons of demand there. Now let's come to Indian markets, where you are looking at consumption hitting all-time highs in the previous year, and the anticipation is for this year as well. So when you look at the numbers for 2022-23 in sense of sugar demand in the country, it was at 27.85 million tons. Now last year we've done 29, which is a record highs, and the markets do believe it can be 29.5, even 30. I mean, that is something that many of the industry representatives seem to be talking about. There is very strong sugar demand into the country. You get them anyway in sense of processed foods and various off-shelf food there. But apart from that as well, it has to do with the summer demand season in sense of beverages and ice cream that really seems to have picked up. It also has been elections where too many people are out on the roads, and there is an increase in demand in that sense as well in sense of sugar there. When you look at the markets going forward, well, the anticipation is that we have seen a 5% increase in demand in these last couple of months itself as compared to previous year. Now, India is important in sense of numbers there, because global consumption, well, 15% of that is contributed by India. And when you look at production numbers also, 20% 40% of that comes in from India. So all eyes here as we are looking at better production numbers, but our absence from the export markets is something that the rest of the world is also watching.
Okay, thanks a lot, Manisha, for that. Well, moving on, Motilal Oswal has unveiled a new 6-story tower in Bengaluru. My colleague Ritu Singh spoke to Ramdev Agarwal, the chairman of the Motilal Oswal Group, and asked him on what to expect from the markets on the back of the June 4th outcome and lots more. Listen in to a few excerpts of that conversation.
From domestic side, definitely you'll get to see the lot of excitement depending on what kind of mandate is there. I mean, the fun part is that all the people in political circle, I mean, the party bigwigs, you know, they know the outcome because they are seeing the exit poll on a daily basis. 5 phases are done. They would have some kind of inkling from their own exit poll. Because exit poll is done the day on which the voting is done. So they have the result. But public, it can be done only on after the last. So my sense is the way they are talking about whatever large number, 300 plus, 340, 350, I think they might be, they almost can see what is going to be the outcome. So even the betting markets, which is much more independent and they don't listen to anybody, no nonsense, and you can put your bet. And that's talking about 310 BJP alone. I think if that kind of number comes, at least the event is behind. Now the continuity of the current regime and the first 100 days and new set of cabinet and new thought processes. Even the world is watching more than us. World is watching. What kind of, I mean, see, ultimately it's a large democracy and I mean, country, fastest growing large economy in the world, and if there is any disruption here, it could spoil the story. So, you know, suddenly the press becomes skeptical, the FIs become skeptical. I mean, to us it doesn't matter so much, but to the world it becomes, and it's one of the best stories around. So my sense is it's a very well watched, not only domestically but internationally election. I think it is going to make headlines in all the global newspapers.
Well, let's say there is political continuity. What would you watch out for as the big macro themes that will play out if the Modi government comes to power for the third time?
See, first thing is I think it is going more of same. The direction they have set, I don't think they have set it for second term, and then there is a very different, of course it becomes bigger. See, what happens is that every 7-8 years economy size is double. Now double from where? Say 7 years back economy was $2 trillion. So they were getting say 12% of $2 trillion, which is about $240–250 billion of taxes. Today it is a $4 trillion. So in $4 trillion bigger economy, they get 12% of $4 trillion. So that makes it almost $500 billion of tax revenue, which is about say 40 lakhs converted into Indian rupees. Now in next 5, 7, 8 years, this 4 is going to go to 8. So government's own revenue will become $1 trillion. You know? So the game, I mean the additional resources in the hands of government will just go to balloon, and I'm taking this as a same tax rate to the GDP. But as the GDP rises, they also have a chance to increase the tax to GDP kind of thing. So my sense is we are looking at, say, in 2028-29, which will be their exit, 29 will be exit year. That year, they would have $1 trillion tax revenue.
So from a market's point of view, what would be the themes that would look attractive with this political continuity if it were to be?
So one is that, see, there are 50, 60 sectors in the economy. Now what happens is, any given point of time, all of them are neither going down nor all of them are going up. So right now we have about 20-25 sectors which are doing very well, and 30-35 sectors not doing so well. You know, so the things will keep churning. Say like last year automobile was not doing well, but in last 3-4 quarters automobile has picked up big time. You know, across even the affordable automobile like Hero MotoCorp and all TVS. They were not doing so well, but now they have also got momentum. So the trickle down of the wealth effect. See, one is that what the government is doing and what the consumers are doing. Third is what markets are doing. You know, this wealth effect. You know, this last year I believe we had a change of about 125 lakh crores of additional wealth in your and my pocket. Okay, that is about 30% of GDP. Of that, even 2-3% if people start spending on marriages, travel, consumption, whatever you say.
Consumption-driven
Yeah, so you can see the consumption boom. You see the first thing what people want to buy, the moment they become rich, they want to buy better and bigger house. And you see the boom in housing. All the real estate companies, they were in dumps just 4 years back. Today, they don't have time to talk. Yesterday, I met one of the most prestigious real estate company in here. And he says, sir, I don't have any inventory. So sad. And the demand is so much and I don't have any inventory. So that's the kind of thing. So the boom will keep moving from one sector to other. And the boom will be bigger for the ones which are doing very badly. Because the delta change will be very large. Because markets are all about delta change.
Okay, well, interesting conversation with Ramdev Agarwal as sort of they enter Bangalore with their own sort of Motorola Oswal towers there. A lot of excitement around, in domestic markets amongst domestic investors on around the election results. And of course, Ramdev, they're betting on a continuity as far as politics is concerned. All right, let's talk about specific names. Markets flattened out. We're down about 5 points. But Divi's is something we want to sort of touch base upon once again. Ekta is here to do that. Ekta.
Thanks for that. Well, Divi's Labs is reacting to what is a good set of numbers. So the revenue is up around 18% on a year-on-year basis. Margins have come in at a multi-quarter high for Divi's at 31.7 versus 25% and versus estimates of around 27%. Profit also 538 odd crores. Street was anticipating around 465 odd crores. Now, in terms of commentary, it was positive because the key driver was the custom synthesis segment, which, according to the management, benefited from seasonality plus 2 commercial projects. They've maintained margins despite price falls in API due to backward integration plus higher volume share. They're estimating long-term double-digit growth to be aided by long-term supply agreement with one of the innovator customers that they have signed up with. Divi is mulling entering into the market for basic amino acids that are basically key starting materials for GLP-1. So not that much of a blockbuster entry into the GLP-1 opportunity. 2 molecules are going off patent, which would provide opportunities in FY25 and 7 molecules over the next 5 years. Capex 1,500 crores, cash of around 3,200 crores on books. Kotak retains its sell target price 3,250. According to them, valuations stay rich. Goldman Sachs neutral, target price 4,020. Jefferies hold, they've raised their target price to over 4,000 odd rupees. Elara sell, target price of 3,017. Upswing quarter, but outlook unchanged according to them. Valuations, remember for Divi's, remains punchy at around 40 times plus for its FY26 PE.
Okay, thanks a lot, Ekta, for that. Let's slip into a quick break. On the other side, we will connect with Sanjay Kulshrestha, who's the Chairman and Managing Director at Hudco, to discuss their Q4 performance. Do stay tuned in. Welcome back. As promised, we're going to talk about Hudco. Now, the company has delivered a strong Q4. They reported very good disbursement growth. AUM growth was strong. To discuss more about this, Sanjay Kulshrestha, the Chairman and Managing Director at Hudco, is joining in. Mr. Kulshrestha, good morning and thanks for joining us. I want to talk about how your disbursal growth was so strong. What is the expectation in FY25? Is this a sustainable number that we are looking at?
Thank you and good morning. We had achieved the overall growth in the loan book to the extent of 15%. We had raised from 80,000 loan book to 92,000. And as a midterm target, we had taken that within 2 financial years, our loan book should become 1.5 lakh crores. As a part of this strategy, we had started growing up and this year we had more than double the disbursement. And for this year, we had kept the target of 32,000 crores and for next year, it will be around 40,000 crores. And the growth is very high and because of the robust policies of the government and the ecosystem of the lending, I think it will be possible to grow at least at the rate of 20 to 25% of the CAGR. I will also like to add that the financials of the companies are so strong, which are very supportive to our borrowings also. That will give a really boost to the disbursements.
Okay, so can you give me the disbursement growth number? I'm looking for that. what is the disbursement growth that you hope to achieve? I mean, it's gone up 150% quarter on quarter, but year on year in FY25, what kind of growth are you looking at? And which is the segment of housing that is doing the best? Affordable, luxury, mid segment? Where are you seeing maximum demand?
See, we are into the affordable housing category. We are not funding to the private sector, and all our loans are extended to the state government and state government entities. Since the Honorable Finance Minister in the last provisional budget has declared that there will be a PM Grameen, and there is a commitment from the government regarding extending the CLSS scheme also, so that will give a good opportunity for the company in the housing sector. Other than the housing sector, I see growth in the urban infrastructure, which consists of water, road, multilateral corridors, industrial corridors, new town planning, power, energy, waste disposals, so all the metro. So all these areas will provide us a good appetite to extend good loans, and which is backed by good programs and good support with the state government. So I am sure that whatever we are emphasizing, and since we had proved during last financial year that the growth can come, and I am very hopeful that we will be making the disbursement to more than 30,000 crores from this year's 18,000 crores. So I am very hopeful that by 2026 our loan will be something near to 1.5 lakh crores.
Okay, all right, got that, sir. That's helpful. What about your yields that you enjoy? Because the concern is that maybe they're not as attractive as they could be, despite the robust growth in sort of business, interest income, etc. Interest income has only increased by about 1% quarter on quarter. Could you explain why are yields lower?
Yeah, actually, if you start from the nodal point that our asset quality is very strong, and we are extending our loans of around 97 or 98% to the state government and state government entities. So because of the good asset qualities, our yields are low, and the company commitment and the objective is to grow the social sector in the country, to support the government of India initiatives. At the same time, we keep on working on lowering our cost of funds. You may have seen during last financial year, we had cut down our cost by around 26 basis points. It has came down from 7.46 to 7.1%. So our emphasis and target is given to my team to cut down the cost and to be in the range of around 1.6, 1.7% of the spread, and NIM to the tune of around 3.1 to 3.3%. So because this is sustainable growth, and we want that infrastructure in the country should be more sustainable, more viable, and no new NPA should come to the company.
Okay, 3.3 odd percent in that range. That's essentially what you're aiming for over a period of time, right? And of course, I mean, given the line of business that you're in, the focus is not exactly to sort of try to expand that as much as possible. It's a balance for you.
Yeah, I think 3.3 we can achieve in the first half yearly of this financial year. So it will not be a big deal. As per our books, around 20,000 crores is given to the government of India, and we are getting some servicing charges for around 40 basis points. So if I take my loan book minus the EBR, the yields are much more higher. So I think spread and NIM is not a problem. And we are also looking at that there may be some softening of the rates in the second half of this financial year. And the statement is backed by, you can see the RBI dividend or the inflation controls, or the deficits are reducing. So a lot of financial stabilities are coming. And everything is indicating that rates may start softening. So additionally, we are doing a lot of measures internally and externally to reduce our cost of fund. We are diversifying our resources. Internally also, we are controlling how to deploy the HQLA or how to do the provisioning. At the same time, we are also working towards the resolution of the stress assets.
Right. Could you give us a sense of the stressed asset book? What is it at? What's the plan going forward?
Yeah. So I'm happy to inform that our net NPA now is only 0.36%. This is one of the best in the industry. We had keep on reducing our gross NPA, and now it stands at 2.7%. We had reduced it from 3.42%. So keep on working on resolving all those assets, and I'm very hopeful that most of the assets will be resolving within 2 years of the time, because around 1,400 crores loan book is under this resolution of the NCLT, and I'm pretty sure that they are in the advanced stage, and these assets will be resolving during this financial year. Other than this, there are so many cases in the DRT and DRAT, and which are taking so long. So we are working with them, and we are trying to align our OTS policy in line with the guidelines of the RBI. And very soon you will find that these issues will be resolved.
And that 1.5 lakh crore AUM is by, you said, FY27, right? So you're at about 92 right now, by FY27. Yeah,
it is. True.
Got that.
True.
Got that. So thank you very much for your...
It's an organic growth that the company will be doing.
Got it, sir. Thank you very much for joining us. Appreciate you coming on here on CNBC-TV18. Good luck to you, your team, as you continue to execute very well. And of course, I mean, the market's done, its part in terms of bidding the share price up to new highs. Thank you very much once again. So that's the management of Hudco with the outlook for business. The markets come back into the green. The Nifty is up about 25 points. It was down about 5-6 points, but largely flat. But there's a fair bit happening as far as specific stocks are concerned. Market breadth is still negative, not by a big margin or so. 1,400 stocks are down, and you have about 1,000 stocks which are higher. It's a wrap on this edition of Bazaar. Thanks very much for staying with us. But stay tuned. Chartbusters will pick up on all the action in just a bit from now.